access, and we are rock star, guys. Pretty groovy. I like it. I'm going to get out of this trade so I'm not distracted. For you guys that are in trading view, there it is. There's your trend trade. Everything says up, pull back to the zone, close on the right side. I was a little bit early, but that's okay. It happens. I'm working through rules just like you guys are. And then we will do it. All right. I got $325 locked in. I'm just going to let it run. Guys, we're going to see what's going on in the wonderful world of Nexgen. We're going to see what's going on in the wonderful world of trading. One more picture just to get it going. All right, news. Today is Monday, June 2nd, and we're going to look for high impact news this morning, guys, and we've got some. At 10 a.m., we have ISM Manufacturing PMI. I don't have any idea what that means, but what I do know is that with high impact news, the market can bump, it can jump, it can spike, it can do all these things that we don't want it to do. And we're just trading patterns. Breaking up voice, Peter J, seriously? Is everybody getting that breaking up, or is it just me? Here, let me try this. Hold on just a second, guys. I'm going to pull out my... I'm going to try and switch the audio input real quick. It's intermittent. Bob, you're good. Is anyone other than Peter having a challenge with me? Sometimes it's me, sometimes it's not. When I look at my YouTube studio, everything looks like it's coming through loud and clear. I did all the microphone checks yesterday. It was all good. Peter, you might want to do a reboot. And then if we get to the point to where you guys are finding challenges with it, I can go back to, what do they call it? I've got one of the cameras that you hook up so you can see your face that has a microphone on it. I can't even think. Webcam. There you go. So we can do that if we need to. Jerry, if you want to try to log out, log in and see, or Peter, I apologize. See if that helps for you. Guys, at 10 a.m. and at 1 p.m., we have high impact news. And what this high impact news, all it is it means that somebody could react. That's why they post it. Somebody with a lot of money could make the market change directions. And we don't want to be a part of that, guys. Everything that we do in this room is patterns. Everything we do in this room is really just watching the market repeat itself, recognizing an advantage through what the market does, and then capitalizing by taking a trade. And the trade that we're going to take, initially, what we're going to talk about first and foremost, guys, is what we call a high probability trend trade. And a high probability trend trade is only 3 rules deep. And it's a trade that when you learn the advantages, when you learn how to recognize the rules being met, this trade has the potential to win up to 70 to 80% of the time. But the most important thing that this trade is going to do for you is it's going to take you out of the mindset of wanting to be a trader, a day trader. And guys, I want you to be a chart reader first. Remember that if you're new to Nexgen, if you're old with Nexgen, Nexgen isn't a signal service. Nexgen is an indicator company. And these indicators are what help you make good decisions. Your indicators, Gary, is that for Peter J? My system's good. Yeah, you guys check your... Oh, thanks for that, Gary. You can go through your system. You can check Discord and make sure that you've got the volume where it needs to be. I appreciate that. Thank you, sir. So guys, we're going to learn to read charts. We're going to learn to recognize advantages. The high probability trend trade, guys, it teaches you to read those charts. It teaches you to recognize. Okay, awesome. Thanks, Gary. 5 by 5. You know, I said that to one of my Navy buddies, and he looked at me. He's like, dude, you know the lingo. So I did give you credit for that. Chart reading. looking at your charts and saying, wow, I have the advantages. I have an edge. I have a look on my screen that has been proven to win more than it loses. That's what we're doing. And what you're going to find is that 90% of your day, guys, and this is the most true state. Actually, it might be a little false. I would say closer to 95% of your day is spent reading indicators. 95% of your day is spent looking for advantages. And guys, 5 to 10% of your day will be actively trading because those advantages are present. But once you go through the little bit, Gary, if you tell me too much, you'll have to kill me. I get it. I get it. Mum's the word. Lips are sealed. Loose lips sink ships, right? Um, Guys, you're going to get to this point where you understand just by looking at your indicators where the market is likely to continue. Initially, we're going to use this continuation point for an entry for this highest probability trend trade. You'll understand where the market is likely to go. You'll be able to use indicators, momentum, Fibonacci, and you'll say, wow, with these advantages in place, that market has a better chance of pushing here than it does just reversing. And then finally, you'll understand where the market is likely to stop. Likely to stop areas are what we call termination conditions. And guys, I can't overstate the importance of learning this lesson. You are literally going to know before the market ever reaches it where the market may reverse, where it may bounce, where it could turn against you, where there are fights that could create problems for you. And this is all just a byproduct of your ability to read your indicators. So I am going to warn you, not really warn you, but if you're brand new with me, there's your first couple days. You're like, holy smokes, that's a lot coming at me, Mark. Why don't you simplify it a little bit? And I'm going to say to you, all right, I will. I'm going to make it as easy as I possibly can. Day one is a little overwhelming. By day three, everything clicks and then you really start pushing forward. Everybody in this room has been through it. Learn the indicator names first, guys, because your indicator names show up in the rules. So you want to know what you're working with. You're going to have trigger lines. You're going to recognize small triggers. They're two solid lines. They work together to create that small trigger. You're going to have large trigger lines. Two dashed lines work together to create that large trigger, guys. When they're green, they're going up. When they're red, they're going down. We're going to use these to define momentum. We're going to use these to identify trouble. Guys, we're going to use these for entries. And the only thing that you have to know is that these are small and these are large. I teach this classroom kind of on the thought that you don't have to know how to build a watch to tell time. So don't worry about what goes into them. Just know the difference between small and large. You're also going to have areas, and this is just we're just naming them. I'm going to give you a little bit of what they do, but divergence highs is a magenta line. It prints off the peak of a pivot, guys. And what this magenta line tells you is that there was a loss of momentum in that up move, and the market went down. There was a loss of momentum. You see a magenta line. These magenta lines later in life can behave as resistance. You're also going to see Fibonacci resistance, the red lines, in an uptrend. When the market is pushing up, these are the areas that could potentially stop it, create a bounce, ruin your good time. Fibonacci support, solid blue lines. Again, when the market is trending down, this is an area that could create a bounce. You're going to see yellow one-to-ones. These are kind of like Fibonacci lines that print in the moment throughout the day. And if the market is trending down, yellow one-to-ones can behave as support. And if the market is trending up, yellow one-to-ones can behave as resistance. Divergence lows, that cyan line, that baby blue line that prints off a low pivot, that's the one that tells you, hey, even though the sellers were in control, they have lost momentum as the buyers took over. You'll see this line, and when price comes back to it later in life, it could behave as support. And then finally, you're going to see that mid band cruising down the middle. When it's magenta, prices below it, it can be resistance. When it is green, prices above it, it can be support. Guys, you don't have to know the math that goes into creating any of these. Learn the names because we're going to use these names in the rules. On a large chart, these are the areas that can stop the market. On a small chart, you're going to use them for entry. It only takes 3 rules. That's it. It takes 3 rules to identify the high probability trend trade. I just realized that I don't have a source on my, whatchamacallit, on the YouTube. So let me find this real quick. General. My apologies, guys. I am working. I'm trying to get the YouTube picture up. There we go. Display capture. Guys, we may have a YouTube. Oh, here we go. Wrong one. All right, for those of you that are watching YouTube, I apologize. I told you there might be a little snag. We're there now. So the video is going to start here, really. Guys, 3 rules is all it takes to identify a high probability trend trade. That's it. When a rule is met, when it's true, you have an advantage. So rule number 1, strong trigger lines, gives you the advantage of momentum. And when I talk about the advantage of momentum, you're talking about a market that is pushing hard. I mean fast, strong in the direction of a trend. And guys, it is difficult to stop that momentum. Rule number 2 says termination's false. None of those likely to stop the market areas. That's going to give you room to profits. We're just going to call it a clear path. And the idea is that you always couple your clear path with momentum, because when you've got a market that is railing in the direction of a trend and there is absolutely nothing in the way to create a bounce, guys, you're going to find a million creative ways to get into the market and take advantage of this. Momentum and clear path, these are your core, these are your foundation. These are the two that when you have an understanding of these 2 concepts, just focus on getting these into the banks. Guys, this is all you need to create a very consistent, very profitable trading plan. Finally, we will define through rule number 3 the entry area. That's the advantage. And this is getting into the market where the trend is most likely to continue. Getting into the market where it's most likely to bounce and follow that momentum and clear path. So the first 2 advantages are universal. They're going to take you to the next level with your trading. The third advantage is specific to a trend trade. This is what gets you into the market where the market is most likely to continue. These 3 rules only take 2 charts. That's all it takes, guys. 5 things to think about to find the highest probability trend trade that I could ever teach you. Your large chart is a slow moving chart. It's a broad stroke of a brush, guys. It's the overall opinion of the market. The large chart leads the way. The large chart sets the tone. The large chart is the reason you will ever look for an entry. And it takes 1 bar on the large chart. There's a big yellow box around it. This 1 bar is enough to define direction, to define momentum, to define areas. Guys, rules 1 and 2 are met on the large chart. Rules 1 and 2 must be met on the large chart. And when they are, you're going to go to a small chart. And this small chart, man, this is like an X-ray of that 1 bar. This small chart is a faster chart. It's a refinement chart. And it really is just used to pinpoint entries, to give you the best of the best, that likely to continue area. And when you use a smaller, faster chart to enter, you're able to reduce risk dramatically. And you really are. You're going to increase your profit potential, because we are going to pinpoint right where that bounce is most likely to happen to continue with these advantages. This is all we're going to talk about for the first hour. We use these 2 charts because they are a reflection of who you're trading with and who you're trading against. So as we go through the morning, I want you to think of your large chart as the large crowd. These are the masses, the men and women, all the money, the people that have the ability to create a trend because they just feel like having a trend. These are the people that establish the momentum that we look for in rule number 1. And these are the folks that react at those key areas on your large chart, letting you know whether or not you have a clear path or not, guys. So large chart should lead the way. Large crowd typically wins. Your small chart, I want you to think of them as the small crowd. These are the men and women that still have a lot of giddy up in their game, and they can create what we call a retracement. And a retracement is a little push down when the large crowd wants it to go up, or a retracement is a little push up when the large crowd wants it to go down. We love the small crowd. We love their fight. But fight as they might, they typically lose 70 to 80% of their fights. Rule number 3 is designed to pinpoint and get you into the market right where their fight is most likely to be lost. And that is the area where the market is most likely to bounce and continue with everything that the large crowd wants. So remember that there's two forces at work in the market, and you are neither of them. You're along for the ride, guys, and the large crowd is the easiest one to follow. So over the next 30, 40 minutes, what we're going to do is we're going to talk about the trigger line of the Fibonacci rules for when it's okay to trade. I say when it's okay to trade, this was printed up when it's okay to trade, because it's okay to trade when your rules are met, because your rules create an edge. They create an advantage. When you talk about the high probability trend trade rules, what you're doing is you're describing 3 looks on a chart that create a pattern, and that pattern can be tested and proven to win more than it loses. So in order to enter a trade, I want my rules met. And of course, the other side of that is, if my rules aren't met, it's okay to not be in a trade. I don't have the advantages I need. If my rules aren't met, it's easier to do absolutely nothing than it is to be in the wrong trade and hope. Everybody in the room has the ability to simulate and to practice and to get reps and to make mistakes as a brand new user, especially. Guys, make mistakes. It's okay. Your simulator is like going to the driving range. You can't triple bogey at the driving range. I've come close, but you can't, technically. Your simulator is like the batting cages. You can't strike out. All you can do is just get reps in so that when it's time to perform in real life, you've got the muscle memory in place, guys. And the fastest way to get to where you want to be, and the first step in it, is post your simulated trades in the room. Post your live trades in the room. Every time you post a trade, I'm going to give you feedback. I'm going to look at the advantages. We're going to talk about disadvantages. We're going to look at entries. We're going to look at exits, guys, and I'm going to give you my 2 cents. I've been reading these indicators for a long time. I've made every mistake that you're ever going to make in your lifetime, which means that when I see one, I'm going to help you fix it. When I see great stuff, we're going to high five and I'm going to congratulate you. So post in the room, guys. And then we're going to keep it really simple today, unusually simple today. We're going to talk about one trade. That's it. We're really going to focus on the first 2 advantages, heavy. We're going to talk about momentum and path, and then ultimately an entry. Keep it simple, focused in your plan. I will give you a plan. You've got to learn what looks you're going to commit to. What does it look like? What is your pattern? What does the edge appear like on your chart? You've got to learn them so they become easy. And guys, when you learn these patterns, it slows the market down. So whoops, that's the wrong spreadsheet. Let me close that one out. The second part to becoming a confident trader ASAP is, guys, track your trades. And don't just track your trades, track your study. One of the things that seems to be the most true phrase I ever say is that repetition creates recognition, guys. When you do the same thing over and over, it becomes easier. Your brain processes the information faster. There's less effort that goes into understanding. So I've created the spreadsheet. John Novak started it. I made it better. Wink, wink. And the first tab is just your rules. That's it. If I'm committed to my rules being met, I need to know exactly what it looks like to have rules 1, 2, and 3. That's the green sections. And if I'm committed to sitting on my hands when my rules aren't met, when my edge isn't present, I have to know the opposite of weak triggers, or of strong triggers. Have to know the opposite of a clear path. And there they are, clearly defined in the red section. Good t-shirt material. Yeah, we should. I think we should have Nexgen swag. Golf balls and stuff like that. That'd be fun. The next tab is the client trades. Gary's in there. Gary's full of great knowledge. Most of you guys are in here. All this is you guys going rock star on momentum and path, finding your entries, posting in the room, and me saying, holy smokes, way to go. This is so awesome I should put it in here so new users can study it. So if you're learning these patterns, guys, click on these, go through them, read the annotations. What you're going to notice is that you see the same thing over and over and over. And I think what's truly amazing is that when you look at the client trades, these are people from all over the world. These are people in different time zones from different walks of life. And what they're doing is they're trading a pattern. You need a Nexgen hat? We need to do that, don't we, Jerry? I'm going to look at an Etsy store, see if I can come up with some. Maybe for Christmas, we'll throw them out of a sleigh. You've got the entry sequences for long and shorts. Um, one can only lose 30% of them, and then you blow out your game. You've got to go back to the first hole. Guys, when you're defining the area most likely to continue, this breaks it down step by step for long and short trades. There's a lot of ideas on management. First, it's very basic, and then as you grow, and then there's patterns that repeat themselves. And one of the things that you're going to notice is that when you understand path and entry, and those become very second nature, and it only takes a couple days to do that, you're going to start seeing more. You're going to start seeing more patterns. You're going to start seeing more things that repeat themselves over and over. Take pictures of them. These are a lot of the pictures that I've taken of them. But your job is to go to the Build Your Plan tab. This is where when you take a trade and it fits the rules, what you're doing is you're saying, this is my look, this is my pattern. Let me drop that picture. Let me make sure it's annotated on why it's my pattern so that I can repeat that success. As you grow your management plan, as you begin to see patterns, guys, every picture, does she really, Wayne? We may have to hit Trina up a little bit. That would be kind of fun, wouldn't it? I think. Trina's about to get busy. Guys, fill this up with pictures. Every picture you put in here as you build your plan, you can drop in the room, you can get feedback on. And then finally is the trade tracking sheet. I know it feels like a lot on this spreadsheet, guys. Every page is important. Every page is going to pay dividends. The trade tracking sheet, whoops, let me scroll up. There we go. Every time you take a trade and you drop it in the room. So for example, Gary says, check it out. I took this trade. He's waiting for it to get out of a range. But if he took this trade, he would say, man, I took this trade and I traded into a termination condition. Dag nabbit. And I lost. And what he's going to do is he's going to drop that picture in here. He may even turn it into a hyperlink. He could call it loser. He could call it winner. He could call it good trade, bad trade, whatever he wants to do. But he's going to drop it in there and he's going to say, man, I had momentum, but I didn't have a clear path. And when I presented it in the room, Mark said, when price reaches an area, look at triggers for terms, avoidable loss. And Gary's going to be like, okay, I know what the mistake is. I got the feedback on it. I know how to fix it. And this isn't true feedback, Gary. But what you're going to do, guys, is every morning you're going to wake up and you're going to go look at what you did yesterday. And Gary, I think that's brilliant. It doesn't cost anything to take a picture. Every morning I'm going to wake up and I'm going to look at what I did yesterday. And I'm going to say what worked, what didn't work, what felt easy, what kept me nervous. And what I'm doing is I'm identifying the patterns that are bringing me success. And guys, I'm identifying the challenges that are repeatedly taking money out of my pocket. And that's what you're going to notice if you go to the feedback section. Into a term, into a term, into a term. And I have to say to myself, doggone, why do I keep trading into termination conditions and losing money? How do I fix it? And I'm going to go, oh yeah, Mark gave me a recipe to fix it. Let me focus on that today. Let me focus on not trading into termination conditions. Let me focus on not taking momentum trades where there is no momentum. Let me focus on not saying areas are broken when they're not, guys. And you're going to get that. You're going to see these things repeat themselves, and you're going to be able to focus on, with the help of me, to fix it. So take a lot of pictures. Practice on simulator, guys. In and out, moving stops, all that good stuff. But drop them in the room and get a little feedback. That's the second half of class. That's all we do. Keep it simple. Keep it focused, guys. Simplicity pays the highest reward. And let's get going. Let's talk about this trade. Here is your cordial invitation. If you need me to repeat something, if you need me to say it differently, if you want me to put it a different way, all you have to do is say, hey, Mark, let's revisit that. And we will, because I love revisiting. Large chart leads the way. Big crowd leads the way. Slow chart leads the way. Broad stroke of the brush leads the way, guys. And it has to have strong trigger lines because you want the advantage of momentum. Strong trigger lines. We've seen this picture. How do we define strength, guys? Well, you have to be trading with the trend to have strength, which means that if the background is green, the market's going up on that large chart and you're only looking for strong triggers up. In order to have them, both small and large triggers must be green as well. In a downtrend, when the background is red, both small and large triggers must be red as well, guys. If your colors don't match, you don't have strong triggers. It's really a little safeguard for you new users. What strong triggers means is that your small triggers in an uptrend have broken above and away from your large triggers. The large triggers have to be wide. Absolutely, Jared, type it in. And then I will look to it as soon as I get to the back end of this slide. Guys, separation between triggers means strength. Separation, that gap between the two, I want you to picture scissors that are open. This is strong triggers, and when I have strong triggers, the odds are favorable for the market to continue up. In a downtrend, smalls are below, the space is there, and this space lets me know that I have strong triggers. Guys, that gap, those scissors open, the odds are favorable for the market to continue down. Jared, the one thing I'm going to say is I can't see what you see. So if you'll do me a favor and take a picture of what it is you're looking at and drop it in the room, it's going to make my job 1,000 times easier making sure you get the right answer. So guys, separation means strength. The gap means strength. And when you see strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum can push a market. Odds favorable momentum can break key areas. Odds favorable momentum can even cover some of the mistakes that you're going to make as a new user. When the gap stops, when the small triggers work their way back inside of the large triggers, this is what we call weakness, guys. And weakness means that anything can happen up or down. So as we talk about the first advantage, when we look at that first rule, we're going to say either I have strength, I have momentum, odds favorable. You're going to see it OFM. All right, I got you, Jared. And this is my advantage. And once the gap closes, guys, my advantage is gone. So if you're adhering to rules, if your goal is to only trade when the rules are met, it's pretty black and white. You either have strong triggers, the advantage of momentum, or you don't. And guys, this is one of the indicators that I didn't talk about. Jared was nice enough to say, Mark, we got to talk about this one, buddy. Right here, this is what we call a reversal bar marker. And a reversal bar marker simply means that is the spot where, no, you're good, man. That's a great question. Whoa, that got really light. I don't know why it's not dark mode. And we'll keep it in English. Oh man, look at that. I'm in Spanish. How cool is that? I'm going to close that out. Let's just go to a market. So a reversal bar marker, Jared, is, and I don't have data up. See that yellow marker right there? This is the exact price. The reversal bar marker is the exact price, the most current bar will be a down bar after all of these up bars. And that's all it is. Guys, can you hear me okay? So what this reversal bar marker says is that right there, this is going to turn into a down bar. And let's see if there's one. I don't have data on right now, guys. And if you look at the small chart, get up there. On a small chart, that's the exact bar, or the exact price, 63.37. If price reaches 63.37, I'm going to have one of these reversal bars. Does that make sense, Jared? Awesome. So we're going to use that on occasion. If you're using a reversal bar for an entry, if you're looking to see if the large triggers are a full bar away, it's just an indication on the chart that lets you know where all of these up bars will become a down bar, or where all of these down bars are going to print an up bar. It's a good tool. You won't use it a lot as a brand new user, but you'll find a way to incorporate it as you move on. So is everybody good with this? Strength is separation. Weakness means that the separation is gone. That's the easiest way to think about strong triggers. This is the one that gets me looking for rule number 2. And what you'll find is that strength isn't an all-day endeavor, guys. You're going to see strength, and it's going to be bursts. You get the momentum is great, and then it closes. And you get the momentum is great, and then it closes. So you're going to look for opportunities. Rule number 1 is met during that time of separation. When the smalls are inside of the large, that's your weakness. That's where anything can happen. Guys, this is where reversals can happen from the middle of nowhere. This is when key Fibonacci areas are more likely to hold. And it's not a mistake that I was able to take a picture about a 2-hour period in the market. This is a large chart, and each reversal in the market, save one, is with weak triggers. So when we talk about the disadvantage, when we talk about the weakness, it's not that the market is obligated to reverse every time, only with weak triggers, but more often than not, you're going to run into challenges when that momentum is gone. So rule number 1 says strong triggers. Rule number 1 should be met before you look for rule number 2. Rule number 2 is going to make sure that you're not trading into any areas likely to stop the market. Rule number 2 says no termination conditions. You need room to profit targets. Let's make sure we have a clear path. What's a termination condition, guys? It's a Fibonacci-based indicator that may reverse the market. And it's going to be a comparison of the area in the trigger lines, guys. That's it. It can be support, resistance, one-to-ones, divergence, highs and lows. Basically, those same areas that we talked about. On a large chart, these horizontal lines can stop the market. On a large chart, these horizontal lines can create a big untradeable bounce. So I like to think of the areas on the large chart as where the large crowd are most likely to make their decisions, where they're most likely to enter the market, where they're most likely to exit the market, where the buyers and sellers are most likely to fight one another for supremacy. So when we talk about termination conditions, there's a 2-step process to define it. The first step is that price gets to the area. So your dynamic Renko bars, those price bars roll up, they hit Fibonacci resistance, and when they do, all you have to do is ask yourself, hey, where are my triggers? If your triggers remain below resistance, resistance is a termination condition. Price bars come down, they reach Fibonacci support. Once price reaches the decision-making point, guys, we're done with price. The trigger lines tell the story. If your triggers remain above support, support is a termination condition. So what you need to know is that when I reach resistance and the triggers remain below, or when you reach support and the triggers remain above, there's more likely to be a reaction. And the reaction could be a reversal. It could be a fight between buyers and sellers. The area could break. And I want you to accept from day number 1 that you'll never know what the reaction's going to be. They don't send out an email or a fax or blow smoke signals, guys. And your job is to stay away from their reaction. Your job is to stay out of their potential fight, to avoid their potential reversal. So if price reaches resistance and the triggers remain below, If price reaches support and the triggers remain above, rule number 2 is not met. Absolutely no trades into the area. And guys, this is a rule, and every rule that Nexgen teaches has become a rule because if you break the rule, you're more likely to lose the trade. So if price reaches an area of resistance or support and the triggers don't break, each of these stop signs is a termination condition that would have cost you money. Each of these go signs was the opportunity for you to get paid with that clear path. So 90% of your day is sitting on your hands, guys. That's a termination condition. This is what it looks like in the moment. Price reaches resistance. The triggers have not yet broken above it. It's okay to do nothing. We're looking for a clear path. We're looking for nothing in the way to create a bounce. Right here, price reaches resistance. We're done with price. We wait for the trigger lines. They're all below, and you're just saying, okay, I don't know what the reaction's going to be. Let me relax. Let me wait. Let me sit on my hands. We'll see what the large crowd does. Guys, once small and large triggers get above the area, get below the area, it's game on. It's about 10 bars between termination and clear path. Remember, trigger lines tell the story. Once small and large get above the area of resistance, resistance is broken, it behaves as support, and there is nothing in the way until the next area of resistance. Price reaches resistance, triggers remain below. You guys know to stop, to wait, to see what the reaction is. Whoops, where's my shapes? Stamps. There we go. We'll just cover it up. Pop. If the market reverses, you'll notice that small and large turn. Guys, you now have a clear path the other direction until you reach the next area. So there's two ways you're going to end up with a clear path. The first one is if an area breaks. Typically that momentum breaks it, small and large get above. We call this a breakout of Fibonacci, and there's a lot of great opportunities beyond it. And then you may get a clear path. Price has not reached an area, everything is down, room to the next area from a reversal. But a clear path, when you couple a clear path with momentum, and here it is right here, the easiest trades you'll ever take. When you have separation, when the path is clear, these tails on a large chart, guys, those are entries on a small chart. You're actually going to use rule number 3 to pinpoint where these tails are most likely to form. So I want you to see this. Trading away from a fib with momentum, having not reached the next area, guys, that's the easiest money. Trading away from a fib, using momentum and path, defining an entry, taking it to the next area, guys. This is the money. This is what we're talking about right now. So what you need to do as a brand new user is simply learn the difference between a termination condition, price reaches the area, where are my triggers, and a clear path. Price has not reached an area. I've got room to my targets. So termination conditions, large chart endeavor, guys, big crowd making decisions. You're going to know where potential highs and lows are, and you have a simple recipe to define them. There is one termination condition that happens on a small chart. One, that's it. Has nothing to do with areas, has nothing to do with trigger color, guys. If 3 divergences, 3 losses of momentum occur in the same price range, this may terminate a trend. This could create a deeper push, guys. And what this is a small crowd, small chart saying, I know this chart has the best look of momentum you could ever hope for, but we're starting to see a slowdown. We're starting to see losses of momentum. 1, 2, 3 losses of momentum. Are you talking about this line right here, Jared? Again, always pictures are the easiest. Right here? Cool. These are small swing 1-to-1s, Jared. These are used in NASDAQ trading. They're insignificant on a crude oil chart. They're insignificant on an S&P chart. The time frames are just too small. But because it's easier to build time frames and workspaces and include all the indicators so that you have all the options, those do show up. But you'll notice that when I talk about the areas, and let me show the picture real quick. When I talk about areas, I don't bring the small swings into play. I find them distracting personally, and to be honest with you, if you look at my charts, I don't put them on there. I actually go through and I pull them off of my crude oil charts and I pull them off of my S&P charts. Good question. It's what's known as a small swing one-to-one. So the yellow one-to-ones are large swing one-to-ones. Yeah. And those are pretty big moves and very significant. You'll find that they create bounces. The small swing one-to-ones just don't have enough behind them. There's not enough to make it happen. Great question. And then 3 divergences in the same price range. You'll see it on big charts and little charts. You'll see it on the small chart first, and that's just a heads up. Change might be coming. This is the only reason, 3 divergences in the same price range, the only reason if I have momentum and path on the large chart that I won't take an entry. Rule number 2 is not met. But if there's none there, we're going to define an entry, guys. And this is my favorite part of the class because I love the precision. Remember, we've got a large crowd leading the way. We have momentum. We've defined direction. The path is clear and life is good. And guys, it's going to look like this. Hey, Pete, that's your best of the best. Strong triggers, nothing in the way. Well, the small chart is where the small crowd fights, guys, and they create what we call this little retracement or a pullback. And that's how you guys are going to capitalize on these advantages. So rule number 3 says that you're going to use a limit order, meaning that you are literally going to wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback. That's the fight from the small crowd. And you're going to buy or sell that pullback at an area, at a fib, at a midband, or a yellow one-to-one. Because the same way they create bounces on the large chart to potentially stop a trend, they create bounces on the small chart to continue with the large chart trend. But we want those areas to be in the triggers, guys, inside of the larger synthetic triggers, because trigger lines define where the retracement is most likely to go. Price returns to triggers, guys. It's just a moving average. And if you look at a large chart, you see the phenomenon a lot. Price pulls away and pulls back to the triggers, and it pulls away and it pulls back. And guys, this is just one of those gospel truths. It'll accelerate away and pull back. So on your small chart, you have 2 large triggers. You have the smooth large triggers. Those are native to the 5-1, to the entry chart. You'll use those to define momentum, separation between the small and large. And then you have these stepped triggers, and those are the large triggers from the large chart. And when you're looking for your entry, remember the large chart has momentum, the large chart has a clear path, and on the small chart, you're actually going to wait for it to go down. You're going to wait for the small crowd to fight, guys. So everything is going up with the large chart, and you're going to wait for a reversal bar. And this is counterintuitive. Why would I want the market to go down if I want to go long? Because you want to go long from the best spot, guys. The reversal bar begins the pullback. The reversal bar is not your entry. You can define where that reversal bar is most likely to, or where those down bars are most likely to go using the triggers, large and synthetic. So your trigger lines from the top line to the bottom line, this defines where the retracement is most likely to go, but it's the areas inside. It's the fibs, it's the mid bands, it's the yellow one-to-ones, any combination of the 3. The areas inside define where the market is most likely to bounce, where it's most likely to continue with the large chart trend. So when the reversal bar prints, you're going to say, okay, the market could go from the top of this line to the bottom of this line. And then you're going to say, and it may bounce somewhere in this zone. Guys, this is a window from the highest point of support to the lowest point of support. I like to call it the window of opportunity because that blue shaded box is where the market is most likely to bounce and continue with the trend. This window of opportunity is where the advantage of rule number 3 lies. You're going to activate a limit order at the highest point of support inside of that window, closest to the reversal bar, because your large chart has odds favorable momentum, and your large chart has nothing in the way to create a bounce, and you're not going to try to hope that it goes to the bottom. You'll be able to get in at the top, guys. And because you know that it's a window, you're going to learn how to not freak out if it goes to the bottom anyway. One of the things that defining where the market is most likely to continue does for you is when you go through this process, you say, okay, if this is going to be one of those winners, price shouldn't get below these triggers. It shouldn't get through the areas most likely to create a bounce. And you're going to start ignoring the areas below the triggers. I call this the wrong side of the triggers, guys, because once you get below the retracement zone, you don't know if, when, or where that market's going to go up. Entries do not come from the wrong side of the triggers. All right, short trade. Let's go through the step-by-step. Large chart rules are met. Wait for a reversal bar on the small chart. The reversal bar signals the beginning of the pullback. The reversal bar is not your entry. I'm going to connect my live data. I haven't been live so far this morning. Once the reversal bar prints, and honestly, guys, when you learn the language, you'll start looking for it somewhere over here. You're going to say, okay, that retracement is most likely to go somewhere from the bottom of these triggers to the top of these triggers. But triggers aren't bouncy. Triggers don't create ricochets and bounces, guys. You have to define the areas within. It's fibs, it's midbands, it's yellow 1-to-1s. And guys, there is one area inside of triggers here, and it's a midband, and your limit order is going to go 2 ticks below it. And you're going to say, all right, small crowd, come get me. And if they do, you're in that highest probability trend trade. Your advantage is gone once you get to the wrong side of the triggers. Your edge is no longer present if market blows through the retracement zone, blows through the areas within. You're going to learn to ignore these lines on the wrong side of the triggers. And you're actually going to use that area for your initial stop. Your initial stop is going to be 4 to 5 ticks above those triggers, 4 to 5 ticks below those triggers, guys. And we're going to call this where the market should not go. It should not go. If this is going to be one of those winners, the small crowd should not be able to push through the retracement zone. They should not be able to push through the areas within the retracement zone. 70 to 80% of the time, typically, you're going to see that bounce off of an area and continuation with the trend. 20 to 30% of the time, the small crowd ate their Wheaties and had a little extra push, guys, and they're going to blow through everything designed to stop the market and create a bounce, and they will hit your stop. Anything that wins 70 to 80% of the time loses 20 to 30% of the time, guys. It's just a mathematical thing. But what you're going to be able to do is define where the market should not go, where your advantage is no longer present. That's going to be your initial stop in the plan that I give you. And all you have to do, and there used to be a section, we may have to revisit it. There used to be a section in the user guide that said for your first 20 days, and beyond with Nexgen, focus on a high probability trend trade. Focus on a trade that's designed to get you reading your indicators. Focus on one pattern proven to win more than it loses. And this is your pattern. When the large chart has momentum, when the large chart path is clear, guys, you're going to look for the reversal bar. You're going to define where it's most likely to bounce, and you're going to activate a limit order. You can study this historically by using those tails on a large chart. We don't enter on tails. It's important that you understand that. We enter at areas inside of triggers on a small chart. But if you circle the tail, very often it lines up with those areas inside of triggers when the rules are true. This becomes your trend trade entry. So you can go back historically. Let's see what's going on. Man, how's that for a termination condition? Let's go back right here where we have momentum and the potential to break, guys. And I'm going to put a circle on this tail. And I'm going to put a circle on this tail. And we're going to go see what those look like on a smaller, faster chart. So when I pull up the smaller, faster chart, I'm going to scroll back. And guys, this is one of those times where the market bounces on the wrong side of the triggers. This is one of those times where rule number 3 isn't really met. The areas are not inside of triggers. It goes where the market shouldn't. It does continue up, but guys, you're going to be able to say, that's just not my entry. Let's see if we can find a perfect one. Mondays are a little wonky sometimes. They really are. Because everybody's waking up and getting going. Let's see what that one looks like. Well, that one went right back to resistance in the mid-band inside of the retracement zone. So you can go back and circle these tails. Not a ton of great examples this morning. 90% of your day is waiting. But you can go back and you can see these. And guys, I want you to see this. Weaker triggers, the market retraces all the way to support. Support holds, all the triggers were above. It snaps back to fib. Guess what? That's where the reversal comes from, guys. So this is a pattern. You're going to see it all the time. What is on the run NASDAQ contract? Gino, what do you mean the run? The current, I believe it's June, isn't it? It's only quarterly. Check it out. Let's go to the Googles. I believe it's June, though. NASDAQ M5, quote, settlements. Now I'm dying to know because shoot, I'm going to have to open up my NASDAQ chart real quick because, Gino, I know I should probably know that off the top of my head, but because my workspace is current, I don't need to. Yeah, it's June. Got it. No, it has not rolled yet. That's one of the things that always got me in the beginning, Gino, is that is, so every month on the 15th, Gino, crude and gold roll, but S&P, NASDAQ, stuff like that, that is quarterly. So it only rolls every 3 months. And since we're in June right now, yeah, it should be around the 15th. NinjaTrader will always give you that huge pop-up that says, hey, Gino, we're going to roll. Is that cool? And it'll make you approve it. But yeah, it should be around the 15th of the month. Good question. There's probably a lot of people that needed to hear that this morning. Are there any questions about a high probability trend trade, guys? Major data issues with NinjaTrader you are? Is it prop firm data? Have you, Gino, this is what I do. So whenever I'm having a challenge, and you've probably already done it, but let's see. One of the things that I do anytime I'm having a data issue is I'll go to Tools and Database Management, and I will reset and repair. So I'll do that, go through and see if that'll clean up any glitches that are in it. Another thing I'll do, and this is kind of like all a thing, is I'll close NinjaTrader, but then I'll open it up in Documents. Before I do that, go to Database, and I'll delete everything in this folder, Gino. And then I will go to Temp, and I'll delete everything in this folder. And then I'll go to Workspaces, and I'll delete Recovery. So I'll clean out there a little bit. Yep, database temp. Um, and then worst case scenario, Gino, sometimes there's a glitch in your actual workspace. And if there is a glitch in the workspace, you can go through and rebuild workspaces and start fresh. And a lot of times that'll fix what ails you. And remember, you can always reach out to Jason too. He'll jump on your computer. If there's something wrong, he'll find it in a matter of seconds. He's pretty good like that. All right, guys. So we've gone through the rules. Normally, the only things he can't fix are the things that aren't broken. All right, we've gone through the rules. And I'm going to give you a couple things, guys. And the first thing that I give you today, whoops, wrong screen, is Chart Reading 101. And this is designed to create the recognition of the core advantages. This is defining strong triggers, weak triggers, clear path terminations. Guys, go through, take 25 pictures of each. When you do, annotate the pictures. Why are they strong? Why are they weak? Post them in your spreadsheet, guys. And if you do this, if you go through and you take 25 pictures of strong triggers and you take the time with that picture to point and say small's above, large, wide in the direction of the trend, this is strong triggers, what happens is you're creating that base, that foundation, and it becomes easy to recognize the difference between rules met, rules not met, and ultimately you're going to take the three individual parts and piece them together to create a trade. As you're taking those pictures, there's a high probability trend trade checklist. This is the core of the plan that I'm giving you, and this is going to run you through 4 things that create the highest probability trend trade ever. The first one is a strong top or bottom. This is not one of the rules. This is a bonus. You can take a trade without, but if a no triggers through termination reverses the market, that's a strong top. If none of the triggers get through the termination condition and it reverses the market, that's a strong bottom. And guys, a strong top or bottom is the precursor to the highest probability trend trade you could ever take. Learn this picture because it's rule number 1 for the second trade on the plan I'm going to give you. So this checklist shows a strong top or bottom. It defines momentum. It talks about your termination conditions and exactly where to put your limit order. Pictures for everything as you do your study. And then the second page is a printable checklist. And this printable checklist is the highest chance of success you're ever going to have as you learn to read your indicators, guys. This is those 4 items. Nobody has ever been able to mark yes to all 4 of these items and do worse than 70%. That's pretty freaking amazing. And that checklist is your first plan. So this is your KISS plan, guys. You're going to get this as well. I'll drop the zip file right now in the room. In the chat box, I dropped the zip file. It has everything that I'm showing you, including the PowerPoint that I used to teach. Guys, this is your KISS plan. This is your trading plan. This is your written plan. This is your core plan. This is your first plan. It's a living document. As you learn to read your indicators, you'll create your own. This is just a stepping stone, guys. This is giving you the highest chance of success. It's designed to optimize your chances of success as you learn to read your indicators. It will be your simulation, study, class feedback, and continuous practice, y'all. This is how you're going to create your own plan. This is how you're going to see more beyond the basic. There are 2 things you need to know, and you're learning them on simulator, guys. You're learning these things on simulator. And when it's time to get off and test your plan, you have to know why you'll enter a trade. And the answer is because my rules are met, guys, because my rules describe a pattern, and that pattern has been proven to win more than it loses. All that tail circling that you're going to do to see if the rules were met, guys, all those pictures of momentum, of path, all those client trades that you're going to study, you're going to do your due diligence, and you're going to say to yourself, man, this really does win more than it loses. There's no reason not to enter this trade. There's no reason to never enter this trade because I have these advantages. And what's cool is if you do the study, you realize that it does win more than it loses, but it does lose every now and then. And you become okay with losses when the rules are met. And guys, you're going to have the ability to not take what I like to call avoidable losses because you're going to recognize when you have an edge, and you're going to recognize when that edge is gone. And when you lose trades without an edge, guys, it is avoidable. There's no reason to punish your P&L like that. The second thing you have to know is why you'll exit a trade. Exits are taken either at profit targets, whether they are predetermined, whether they're areas that could stop the market, or if the advantages that you had when you entered the trade have gone away. That's a great reason to exit, guys. And we're going to see an example. We're going to see a lot of examples of these today of people holding trades maybe a little longer than they should have. It's pretty common as you develop a management plan because hope plays in. So we're going to keep it real mechanical. If I enter the market at an area inside of favorable large triggers, my advantage is gone when I get 4 to 5 ticks beyond those triggers. That's where I exit, and I'm cool with the loss. If I'm in a high probability trend trade and 3 divergences print, guess what? I've lost my advantage. It's okay to exit, guys. One of the things that you're going to realize is that the next trade is coming. And when the next trade is always coming and you believe that it's always coming, it becomes easier to exit a trade. So we're going to define entries. We just spent a whole hour doing it, guys. This is your core. This is your foundation. This is the trade that teaches you everything you need to know about momentum, path, and entry. Your management plan and your written plan is based on 2 contracts, and it's orchestrated. It's designed to do 2 things. Management was let me tell a story. I feel like telling a story. Management was my downfall. When I learned the software in the beginning, I didn't learn the software. I just got lucky on simulator, went live, blew out $5,000 and had no freaking idea. When I actually studied and I learned these great entries, what I realized is that they were amazing. And I did a lot of study on them, and I could get into the market where the market was most likely to continue. But I had so much fear in me that I would take the perfect trade and I would exit with a tick profit. And when I exit with a tick profit, I was like, "Ooh, there's a winner," and I didn't take a loss. And at the end of the day, it turns out I'm down money because I had to pay commissions. Guys, learn how to manage your trades. And the easiest way to do it in the beginning is to make it very mechanical, very pragmatic, if then. So that's what this management plan is designed on. This is how I beat my demons of being fearful, because it was 100% if then. It was designed to help me understand stop placement, using the phrase where the market should not go. And it was designed to get me focused on getting paid, taking profits, being willing to exit, guys. So 2 contracts. You're going to learn about stops and you're going to learn how to get paid. You will eventually create your own management plan. And again, it's going to be based on your ability reading the indicators. So we're going to go through the KISS plan management, and it is dependent on your ability to define the entry. Great entries create manageable trades. That's going on the t-shirts that we're printing up, guys. Great entries create manageable trades. Great entries reduce risk. Great entries increase profit potential. So management really starts, if you will, management starts with having a market that is railing in the direction of a trend, and there's nothing in the way to stop it, guys. These first 2 items, these core items, these start your management plan. Getting in where the market is most likely to continue just makes it even better, guys. So if entry is 2 ticks below resistance inside of triggers, then my initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And this is it. Once I'm in, there's my stop. My entry is 71.34. My stop is 71.49, where the market should not go. I have $150 worth of risk per contract. I will know what my risk is before I ever enter the market, and I have to be cool with that, guys. I have to accept that risk. Risk is a part of trading. My targets are predefined in this plan at $100 and $200, respectively. First contract off at 100, second off at 200. If the market does not stop me out, it means that it's going in the direction of my trade. And I know it is because I get a reversal bar. So if a reversal bar prints in the direction of your trade, you're going to redefine where the market should not go. And your new stop is 2 ticks above that reversal bar. You now have $30 of risk per contract on this trade. Why is this where the market should not go? Because this reversal bar is confirming that the market is going down with the large chart trend, with the large chart momentum, with the large chart clear path from the area on the small chart where it was most likely to go down from. Guys, this is a confirmation bar. Your new risk is $30 per contract as opposed to $150. This does not guarantee a winner, but it makes it easier to hold for the first contract target. And if it hits, guess what? You're a winner. You got paid. That's success, guys. And if price reaches your first target, your first contract, one contract is already removed. Those funds go in your account. You're feeling great. And with one contract remaining, you're going to move your stop to break even. Break even is not where the market should not go at this point. Break even is developing the courage in you to remember that the only reason you got into this short trade in the first place was because of odds favorable momentum and a clear path. And the market is more likely to continue down. The odds are favorable than it is to come up and hit your stop, guys. And if they continue down and don't hit your break-even stop, you are out of this trade with $300. At the $200 mark, guys, that's it. Contract's off. There's nothing else to do. And this is $300 from entry to exit 2 contracts. And guys, $300, this isn't your day. This is your trade. This is your moment. This is 2 to 3 minutes of your day. But $300 a day is a $75,000 year, guys. $400 a day, finding a way to capture $400 a day puts you in a 6-figure income. The futures markets trade trillions every day. You don't have to be the first one in. You don't have to be the last one out. You need to find a way to capitalize, trading away from Fibonacci, trading to Fibonacci. And once you pull that off, guys, sky's the limit. It gets better every day. So in that zip file, guys, in that zip file I gave you was Chart Reading 101, being able to learn the large chart advantages. It's the high probability trend trade checklist, knowing exactly what those pictures need to look like. It is the KISS plan is in there, the Keeping It Simple plan. Inside is also everything that we've talked about in the last hour consolidated into 2 pages. Guys, this is it. This is your foundation. Are there any questions about a high probability trend trade? Are there any questions about momentum, about defining a termination condition, about discovering an entry? Guys, I promised you everything you need to be successful with this software. You have it in that zip file. You have the rules. You know when it's okay to take a trade. We've broken them down individually. I've given you a plan to study them. I've given you a place to put your study materials. You have the ability to simulate, to post in the room, to ask for feedback. That's what the second half of class is going to be. And guys, the only thing that I ask is every post that you put in this room, you talk about momentum, you talk about path, and you talk about entry, because that's exactly what I'm going to talk about. And I'm not judging you on your trades. What I'm going to do is I'm going to look at your chart read and I'm going to compare it to my ability to read the charts. And I'm going to point out the good stuff and I'm going to help you where I think you need help. You have a plan designed to optimize your chances of success with the high probability trend trade to teach you to read your indicators. The only thing you new users don't have yet is repetition. You don't have the experience, the time to be comfortable 100% with everything you're looking for. This is where I go to my library and I tell you guys, the fastest way to get to where you want to be is taking pictures, guys. I'm up to 3,600 pictures. I do this almost every day. And if you looked at it from Wednesday last week, I was at like 3,350, guys. I probably take between 50 and 75 pictures a day, annotating charts, identifying trades, working through advantages, working on management. And guys, what happens is the more pictures you take, the more it sticks, the more it resonates, and the faster your chart reads become. And you'll be able to look at a chart and say, man, I don't have momentum, the smalls are in, I don't have a clear path, none of the triggers are through. Hell, I don't even have areas inside of triggers. I'm not looking for a trade. This is part of my 90%. That is how quickly knowing your rules is going to happen. Now, what a lot of you are going to say is, well, I don't have momentum, but it's red. And it's been going down a long time, so these have to break. And I don't have an area to define my risk or even one for entry, but I'm going to get in anyway and hope things work out. And you can trade hope, but hope usually runs out. And Gary, you're absolutely right. Taking pictures only works if you annotate them. If you write what you see, because you're going to go back and study them. Guys, if you don't study, do you guys remember when you were younger and some teacher told you, hey, you'll get out of this class what you put into it? You'll get out of this software what you put into it, guys. The software is the best software in the world. There's no doubt in my mind. John Novak's been saying for 30 years, if you find something better, let him know, he'll buy it. And I've seen him buy a few things that he thought were pretty good and that they weren't. Guys, you have, without question, the ability to understand where tops can happen. You have the ability to know where big ugly bounces can happen. You know exactly what it looks like to have strength in your move. You know exactly what it looks like to have weakness in your move. All you have to do is go through and put yourself in a position to make it happen quickly. So that's what the second half is going to be, guys. We're going to go through and we're going to start looking at your charts and we're going to talk about them. And I've already built some lessons, guys. I have already built some lessons on the charts that I was looking at this morning. And I'll do that. I will look at your charts and I will create lessons based on what I see happening on your charts. So I'll be back in a minute. I'm going to go stretch my legs. Stretch yours. Ask a million questions, post 1,000 pictures, guys. I'll be back in 5 minutes. this time. Short break. We're going to get back at it. I'm going to scroll up to the very top of the room. I want you guys to see this. So there's my chat box that I'm looking at. I've got to go all the way up to the top, guys. I'm going to look at everything that you guys have posted. I'm going to talk about it. If I miss a picture, do me a favor. Say, hey, Mark, you missed it at this timestamp. Don't say, hey, you missed one, because then I've got to scroll through and try to figure out which one it is. You could also repost it. Go, Mark, I think you missed this one. I don't ever want to miss a picture, guys. Don't ever want to miss a picture, but sometimes I do, and I don't mean to. So just let me know. But remember, as we go back and we look at these pictures, the one thing I'm going to do is I'm going to talk about momentum path and entry, guys. So when you put it in, it's important that you tell me, hey, what did you see? And Joel saw separation between the small and large. He even wrote it there, separation between the small and large. So he knows without a doubt, this is momentum. And he said clear path because the small and large are below these 1-to-1s. I've got that breakout. There's nothing in the way. And look at his entry, right at the area inside of favorable large triggers. And what an easy win. Joel, this is textbook. Beautiful. And one of the things you guys may not know is, do you see this little tape recorder up here? Guys, Joel's using market replay on the weekend to become a better trader. You have that option with NinjaTrader. You can go through and you can replay the day. You can fix mistakes. You can take the entries that you missed. You can miss the entries that you shouldn't have taken. You can work on management. Joel, this is a picture perfect high probability trend trade. And because it is, I'm going to steal it. Moo-ha-ha-ha-ha. And I'm going to take that picture perfect rules met trend trade, and I'm going to go to the client trade section, and I am going to put it in there. And we're going to call it Joel's Perfect Trend Trade Short. And now he's in the Hall of Fame. And if you're a brand new user, go back and study that one, because that is the perfect look. Nicely done. All right, let's go to the next one. Better Dad, are you in here today? Quiet today. Let's see what happened. So I want to make sure I'm thinking correctly. Divergence is a termination condition. And while hindsight says this would have been an excellent high probability trend trade, the divergence would have still been in play and a hard no to the trade. So Better Dad, great question. And when we talk about these divergences, let's talk about what we see as a whole even. I like this. One of the things that I see is 1, 2, 3 divergences in the same price range. That's a termination condition. Yeah. And what you have on this particular look is really a 50-50. It looks like the small triggers are through and the large triggers are not. You're coming from a strong bottom down here. So this divergence has the potential to break because of the momentum. Does that make sense? But you're absolutely right. Divergences can behave as termination conditions the same way a fib can, the same way a 1-to-1 can. So you have a 50-50 look on a divergence. You had an entry. Should you choose to take it despite the divergence? And yeah, in hindsight, it's beautiful, right? But it's 3 divergences in the same price range. It's just a 50-50 trade. One thing that you'll see is the sellers tried to push and the buyers killed them. And the sellers tried to push and the buyers killed them in the same place. And the sellers tried to push, and not only did the buyers kill them, but they stole their momentum. And now the buyers are trying to head up. So you had a big fight here. You messed yourself up Friday in recovering. Right on. That happens. It really does. But all things said, this is a 50-50 from a strong bottom that had a divergence. And you have to make the choice on whether or not you're willing to take that trade. But you read it perfectly. You read it 100% perfect, Better Dad. All right, the Wayne Show. Wayne, are you with me? I like to know you guys are here. There's nothing worse than analyzing 10 charts and you didn't hear a word that I said. Uh, all right, 50-50. Room for 15 ticks profit, odds favorable momentum. So 100% odds favorable momentum. I love it. Not coming from a strong bottom. So this right here is certainly strike one on the 50-50, because when the market isn't coming from an area that reverses it, you'll find that the 50-50s are less likely to be flawless and easy. You tried your let me get in on the way up trick and it didn't work. And then you get stopped out about 2 ticks below the triggers. So if we talk about it from a management standpoint, Wayne, man, they never really got where the market shouldn't go. It was a couple ticks run over. But the right stop isn't a monetary number. The right stop is where the market should not go, beyond those triggers. And that definitely fit into the 4 to 5 ticks range. So you get back in, totally cool, right? You get back in because you're like, oh man, I probably shouldn't have been stopped out here. This is still a pretty good look. It went to the retracement. I got confirmation off the areas. Let me get back in. And it looks like you make a little money and you're too aggressive on your stop on the way up. Why? Probably because you just lost. Maybe it was the first trade of the morning. And then Wayne, I know you like this market flow chart. One of the things, guys, and this is one of the biggest things. Look at the top line of those fast triggers, Wayne. Until you get to the other side of that line, it's probably going to push down a little lower. So your first entry is directly into it. This doesn't close on it. Your second entry is on the good side, and it's effortless. And I think for you guys that are coming into market flow, this is one of the lessons that you're going to have to learn, and you're going to have to learn how to trust. Is these fast triggers on market flow will absolutely ruin your day. Once you got to the other side of them, Wayne, it was easy street. You were just a little skittish because of the bad things that happen over here. But it's a good look. You got head faked. Bad stop. It was a great look. The execution could have used just a little bit of work. Perfect termination condition. White bar breakout. When it pulls back, this up bar creates the HVA. So it's not an HVA trade. What it is you have a termination, you have a termination, you have a termination. Triggers roll, triggers roll. You take the perfect snapback entry and ride it up. Wayne, I love everything about this one. 100 and 200 targets, out before the first trouble, out at the second trouble. That's a nice trade. And guys, when you talk about these termination conditions, they will set you up for the first trade, which is what Wayne did, looking for the trend trade. Great job on that one. That's a keeper. Smalls rolled. And again, this is a tough one, man. You do have the termination. It's directly into another termination. Triggers up. Smalls way above the large. They did roll, but they are 3 days above those large triggers. That's a tough short. I like the reasoning on it. You take it, and then I love that you got paid. Low tick. That's awesome. And then why would you hold that one for so long? And this is where management has to come in a little bit, because you got your white bar. Everything is up. You're on the wrong side. I'm not sure I would give money back on this one. Your large are still above the synthetics. Your smalls are still above the large. Trying a looser stop will have a reason. And And one of the things is a lot of people, Wayne, I'm not saying you, but a lot of people get caught up on numbers. Oh, I'll make my stop loose. I'll give it room to run. If you're just arbitrarily giving it a room to run, you're going to give a lot more back, right? So 3 ticks above the midband. So let's go back and address that. What makes you believe the midband is going to hold with this look on the large chart, right? What makes you believe the midband's going to hold when you get a breakout bar, everything up, fast triggers up? Is it worth that 3, right? So I'm not saying that you had a reason or didn't have a reason, but I'm saying make sure you have a reason for it. The same way you entered on the way down here, this is one of those ones, if my large chart looks like this, and let's just do this. Let me take that out. John Novak used to do this to me, Wayne, and as much as I hated it in the moment, it really did help. He would say, hey, Mark, is this your best look for a short? And if you take a deep breath without the pressure of a trade and you look at large triggers vertical and small triggers 2 points above them, your brain starts to say, man, this may not be my best look for a trade. The overall strength of the market is up. And yeah, there's a little retracement, but it's just pulling right back to those large triggers. And you might manage these a little tighter. There's times to be loose and there's times to be tight. When you have odds favorable momentum and a clear path and you take the perfect entry, that's when I loosen up. When everything is going my way, loosey freaking goosey, Wayne, without a doubt. When you're fighting, it's okay to be a little more assertive, to be a little more aggressive. It's okay to get to break even fast because you know you're not in the best scenario. This is awesome. And this is the one where I'd get even a little loosey with my targets. I'd say, man, with all of this momentum from a strong bottom, from the perfect entry, it's more likely to tap that pink line than it is to just reverse somewhere in here with every indicator I own going up. Does that make sense? Guys, the entries you're going to find are easy. You're going to realize that management is where you're going to have challenges. All right. Wayne, this is where we are going to talk. Momentum trade with a clear path. There's your momentum trade, right? I love it. I'm just going to jump in. But we've got 2 lessons. You said waited for price to go above divergence. Wayne, I made these pictures just for you. Waited for price to get above divergence. Momentum on all 3. Wayne, I'm going to give you something that's going to prove to be super valuable. Price is not above the area, guys. Price is at the area. Wayne, if it looks like this, you're not above. You're 1 tick. And if you've ever watched one of these bars, price fluctuates up and down in this bar. So you've got in here 12 ticks of data that's going to go up and down, up and down, up and down, up and down, up and down. So price is not above that area. Price is trading at the area, which means that that area can create a bounce. Price gets above the area when the back of the bar clears the area, when every bit of price action gets past whatever could create a bounce. This is your look, Wayne, and this look right here, this is going to change your life on these trades. Because there's a small chart. I want you to see it. At the area, got a bounce. At the area, at the area. Even right here at the area, you get a bounce, get a bounce. So by waiting for the back end of price to clear, guys, a lot of you are trying these jump-in trades. You're calling them momentum trades. It's not a true momentum trade. But you're trying to do it right at the areas that can create a bounce. And look what it does. The area creates a bounce. And Wayne, it gives you the perfect high probability trend trade, and you get stopped out at your entry. Does that make sense? That one little thing, Wayne, I think is going to pay huge dividends for you. Don't believe price is above the area here. Price is at the area that can create a problem, and that's the perfect trend trade. So that's the arbitrary number again. I'm going to leave, where were you in? At 6.9, you're out at 5.3. So I'm going to leave $160 of risk on this trade, or you could just wait for the perfect trend trade and make 300 on the way up. And again, I think that lesson's big, and I made those pictures for you. I think that is going to take a lot of these out of the equation. And Wayne, when you talk about management, does it make sense? And this is for everybody. And gosh, I had to learn this lesson. I'm going to annotate what I see, and this is for the classroom. I see odds favorable momentum, rule 1 met. I see a clear path, rule 2 met. I see an area inside of triggers for rule 3 met. I see a high probability trend trade setup. This is perfect. So one of the things when you're working on your management plan, everybody in the room, should I exit at a high probability trend trade entry spot? And you might say, I'm looking looser stops, right? This is an avoidable loss that was right at the perfect entry. And from 054 to 07 is $160 worth of profit per contract. And it's a big difference. Does that make sense, Wayne? Management can't be arbitrary numbers. Management needs to be where the market shouldn't go. Awesome. I love it. I appreciate your pictures so much. Odds favorable. Potential to break, divergence on the trade, no areas inside of triggers, and you say, you know what, I'll take a shot. And you did. And you managed it aggressively. Nicely done. Giving up rule number 2 and 3, so you force it to go in the direction of your trade. What did it do after? And look, it did crater, right? So fortunately for you, momentum went up a little more. But that's given up 2/3 of the good stuff. I'm glad it worked out for you. Momentum. Okay, 2 momentum trades. First one had poor stop placement. All right, so here's the second picture, Wayne, that I made for you. If your triggers don't look like this on the large and small chart, you don't have a momentum trade, guys. The whole idea, if there's not an ounce of chocolate in your cake, you don't have a chocolate cake, no matter whether or not you call it a chocolate cake. If you don't have strong triggers, you don't have momentum. That's it. So this is not a momentum trade. This is weak triggers, hoping that it goes up. And without the momentum, it sure enough bounced. It turns into a trend trade. And the trend trade goes up, and you're in it late. Does that make sense? Not a momentum trade. An exit right at the area in the retracement zone for a trend trade. So that's 2 for 2 on that one. I hope that makes sense. And again, guys, I take my personal experience and turn them into lessons for you guys. And Wayne, if I had a nickel for every time John Novak said, dude, why do you think you're taking momentum trades if you don't have momentum? And I'm like, shut up, John, you're not the boss of me. And that's kind of how siblings work. Odds favorable, 50-50, pulls back to the area inside of triggers. You catch it on the way down, and that's a pretty easy trade. Really nice. Gave an extra 30 when it dipped. Always a nice thing. Great looking trade there, Wayne. Odds favorable, clear path. I love, see how the fast triggers are going down? That's awesome too. Didn't quite get the mid band, so you catch it on the way down, make some money, and then you get out right at the area inside of triggers. This is one of those ones where I think about it in my head. If I am 3305, 3504, so if I'm $200 away from my next entry, I'll typically just hop out down here. That's just me. I'm not a big hold guy. I would rather get paid twice and then just re-enter if my rules are met. You got out on the way up, which is still good. You still made your money. You protected your investment. And you can always re-enter the same way you did there. So nicely done. Great trading. Chili dog. Smalls are outside. Back of the bar clears. Smalls are outside. Nothing in the way. That's the one. Momentum on 3 charts. Nicely done, Wayne. I like that one. All right. Against the trend, no momentum, directly into a termination from the wrong side of the triggers. You get in on the way down and you get paid. Aggressive stop due to no momentum. Guys, this is one of those looks. When you don't have a termination that that reverses the market, and this one never reversed it. The market pulls all the way up to the resistance area, and Wayne says, okay, wait a minute. I'm all the way up at trouble. The large triggers didn't even blink. They're more than a full bar away. Let me get in on the way down. And you do, and it's nice, and you get out at the HVA. And that's a cool little snippet right there. That's the gap theory. And then when it gets to those triggers, they have to make decisions. Everything rolls down and you make the decision with it. You trade into the termination. And guys, this is just a calculated risk. This is every indicator down from a termination. And Wayne says, I see the blue line. I'll be aggressive. Nicely done, Wayne. One more. Strong large triggers, divergence on the large chart. Comes up to the mid band. Large triggers don't blink. You let it roll and get in on the way down to go back to them. This is one of the things that's fun for me, guys. And this is a pain in the butt because I notice stuff. Where was it? I don't know. There was a chart that looked just like this, and you went long. I like that you held it and you go short with the direction of the large triggers. It's an interesting trade. I don't know what it is. No rules met, got lucky. You knew it too. Wayne, great trading, man. I hope some of the feedback was helpful. I know you have a pretty solid plan. And I'm not here to beat you guys up on anything you take. I'm just here to give observations, see if there's anything I can do to help. Pete, strong bottom, odds favorable, potential to break, perfect entry, missed you by 1 tick. Great stop placement. And then you make the money. Nicely done, Pete. Red background, green triggers, small beneath the large, not a thing to do. And guys, this is one of the most effective pictures you can take. My rules aren't met. Let me just take a picture of it instead of taking a trade into it. Nicely done, Pete. And then it all works out. And let's talk about this one. Coming from 63 right here. So I'm going to get you, Pete, the same thing I did to Wayne a second ago. Is that your best look for a short? Not coming from a termination, smalls breaking above the large, larger up, you're above all the areas of support. Of course not, right? There's nothing. Well, It's not always obvious in the moment, and that's why I do this. You saw the divergence, and you went short with the smalls above the large, right? Directly into the midband. Every indicator was up, and you formed the opinion to go short. So one of the things that I would do, Pete, and this is just me, use it if you want. I wouldn't annotate closed out short for a loss. Why did I take the short? What was, and you don't have to answer, but I have to ask myself, what made me think this market was going down with this look? Was it me just hoping that it would, because if it did, I would look like a rock star? Was it me going, oh my gosh, I'm just turned around, I went the wrong direction? Because that happens, and I've done that. And your recovery is great, and you get back in and you're like, hold it, let me go with the market. But anytime I do this, and I've done this a lot, I ask myself, what made me think it was going short? Because, Pete, in my own personal trading, divergence in the midband outside of the triggers. So that pretty much says with this look, that midband's your first spot for a bounce to continue with everything that the large chart says. Okay, so you know why. Aggressive trade, as long as you know. But when I do trades like this, I do. I go back and I look at my pictures and I ask myself, I said, all right, what was going on that made me want to take this trade? Usually, Pete, it's a short about right here at a pivot stop out where I'm like, okay, it looks like this, I'll take a shot. And then I just get my ass run over because everything says up on the large chart. And I have to go, okay, turns out the market doesn't care about my opinions. The market doesn't care if I think a pivot stop out should hold. And you just took an aggressive trade, and when it didn't work, you went with everything and made it all back. So awesome job. I think sometimes a little self-reflection is important. Sometimes why did I do that? What made me feel like that was the right trade? Odds favorable, potential to break. Everything says up. You just jump the fudge in. And because it's nothing but jumping the fudge in, you get paid quickly. Outstanding, Pete. Not a momentum trade, right? Because you don't have momentum. So what is it? I just jumped in. Everything set up, and I just jumped in because I figured with everything going the same direction, I should be able to make 10 ticks. But when you make 10 ticks 4 times, holy crap, yeah. That's $400. What did that take? All of a second? 2 seconds? Big momentum. When you guys understand momentum, it opens doors. When you couple it with a clear path, it opens doors. Pete, great trading, man. Thank you for posting those. Wayne says this one was fun. Whew. All right. So, chili dog with high probability add-on off a strong bottom, strong momentum, large never rolled. So, when it hits the midband, large triggers don't roll. Great recognition on that one. Guys, if these large triggers don't even blink, they're going to try to go up again more often than not. You let everything agree. And when everything agrees again, here's your lesson. So Wayne, do you remember this one? If the back of the bar doesn't clear the bouncy stuff, you're not clear. And it turns into the trend trade. At least you didn't get stopped out on the trend trade. Didn't clear the area here, more likely to create a bounce, comes right back to the area inside the triggers, and that's when it goes up. So if you were going to take this as a true chili dog, you have the exact same entry. All right, Wayne, I'm going to give you one for your pictures. I know you like data points. Let me make my arrows a different color than yours. The first entry, back of bar, didn't clear, and you had to suffer the retracement. When the back of the bar cleared, you got the same price and it flew up, no headaches. So you guys that are just jumping into trades, if the back of the price bar doesn't clear, you're not clear. So I hope that's helpful, Wayne. That goes back to what we saw earlier, but it's the same price. Back of the bar clears, it's easy. Back of the bar doesn't clear, you suffer the retracement. I don't know about you guys. I hate it when the market retraces against me. I am not a fan. I like things to rocket in the direction of the trade. And they typically do when there's momentum and nothing in the way. Waiting for the consolidation to be over, termination, determination. Gary's just saying, man, I don't have to trade in a channel. I'll wait for him to change the channel to get outside of the range. All right, Bob, strong top, odds favorable, back of the bar clears, easy money down. I mean, perfect. Bob B, nice. Huge momentum from a strong top. And on that small chart, letting the back of the bar clear. It's a game changer, isn't it? It's a game changer. With this level of momentum, easy peasy lemon squeezy is the technical term. I think they teach that in trader school. Gary, your charts are so hard to read. Broke out of the range, odds favorable, 1 minute range, breakout, and you just rock starred up with everything going up. I love it. Gary, nice. And great patience. Great patience for it to break, and once it broke, you found your money. It didn't take the trade pullback, divergence plus 20 points, and again, your charts are really hard for me to read. That market was screaming that's a lot of bars right at the open. 1, 2, 3, 4 divergences. And I don't know what it did at the breakout, but yeah, great patience again, Gary. Great patience again. God bless you. There's so much on that chart. Try not to get sucked in. Can I offer a thought? And let me know what you think. Let me know what you think. So you have NASDAQ, which produces a metric butt ton of bars. And you know it does. Look at how many are in that short little spit. Do you need 2.5 hours of large chart NASDAQ? I love this trade. I love that you waited for the breakout. And I don't know if it's the rear view mirror going on. And I also want to point out, and I do this and it pisses you guys off, and I apologize. There's all you're trying to go long directly into your zones and just getting walloped all the way down. And you didn't share this one, right? And this might be the one that you need to avoid. This one was easy. Everything set up, you broke above. This one fought everything. This is the one you should post in the room, and let's talk about it. And if nothing else, the discussion might get you avoiding those shorts. Right on. But that's just a part of the process, right? I love your trades. And guys, I say this to everybody, and I don't force you to post in this room. I can't force you to post in the room. But if you are only posting winners when everything is perfect, what are you learning about how to avoid losers? What are you learning about the mistakes that you're making? What are you learning about what needs to be fixed so that you can find success? Guys, I love posting winners. Winners make me feel good. Winners, oh my gosh, I'll post that all day. Look at this, guys. I'm in a trade and it's winning and it's winning and it's winning. And this is amazing. And you know what I didn't put on here? No, you're good, Gary. Do you know what I didn't put? Is I broke my freaking rules and got in 1 bar too soon. I knew it was the trade, but if I just would have waited for the right bar, is an easier trade. That's a trend trade, by the way, guys. Teach that with the HVA or with the TV indicators. All right, Cav. Price pivots, divergence form. Triggers roll up. And Cav says, you know what? Even from the middle of nowhere, when divergence forms, that market's more likely to go up. With odds favorable momentum, it's more likely to hit the mid-band. And Cav says, I'm going to find a way. And he catches it, and he rides it directly to the mid-band. And Cav, when the mid-band gets hit and the large triggers are a full bar away, it's a termination. And your exit is beautiful. Nicely done, Cav. That's how you catch the small move within the move. Really nicely done. And Gary, I'm not busting your chops. I hope you know that. I just think it's pretty awesome, man. There's this. My losers are where I learn. My losers, I hate losers. So when I have to talk about them, I'm less likely to take them. I know, but I don't like busting chops. All right, let's see what we have, Paul. This is a 21-3, and the 21-3 says, holy smokes, we are screaming down with the potential to break. This is a 13 range, and it says, holy smokes, we're screaming down with the potential to break. This is a 13-2, or just ignore me. I'll have to put a ring on your finger, Gary. And your 13-2 says, everything is strong trending down below all the areas. And then on your 5-1, you're trading off of the area. And there's your large triggers. You're above the synthetics. And the only thing I can say about this trade, Paul, is I know that you're using resistance. It's a difficult entry because there's so many time frames and your small chart doesn't say go yet. But once those small triggers roll, or once you get to the other side of them even and close below, you've got a better chance. It's hard to gauge your entry because even your 8 range chart says up. And one of the things I just want to see. This says down with odds favorable momentum. This says down with odds favorable momentum. This says down, but this says up. And this at the moment is pointing up too. So what's the easiest way to define an entry? If this says up, and I don't know which one you're using for entries. I love, like this one says go. Whoops. This one says go, and this one says go, and this one says go. And these two say pump the brakes, pump the brakes. Strong top, 13-2, picking up momentum, 21-3, 13-2, odds favorable. Entry on the 13 range, up, down bar. Ah, now we're getting somewhere. Up, down, you enter, stop goes above it. Oh, man, it took me a minute to get to there. I like it. Paul, are you listening? That's your pattern. The challenge is it was 2 up bars and then a down bar. But you get in after the down bar, which is nice. And then you have a place for your stop. All right, so let me ask this. If your advantages come from these charts and your entry comes from this chart, do you need the other 2 charts? Or is this just noise? I love it. These 3 charts, and it's kind of cool because when I read your entry, these 3 charts said go and you have a clearly defined entry. What are these for, right? What are these for? And you may have an answer and you don't have to answer. One of the things that I do is when I put an indicator on my chart, I ask myself, and I've got to stop saying one of the things I do. Who cares what I do? What I do suits me. You have to do what suits you. But if I put an indicator on a chart, I have to be able to define how I'm using it. Because if I don't have a use for it, it's just shiny stuff that's going to make me walk into walls and upstairs. So you had a 3 chart perfect. Entry rules defined, everything about it. And man, what a beautiful hold. Nicely done. I like the trade a lot. It just took me a second to understand it. Cav, strong triggers, open like scissors, potential to break that divergence low, perfect entry, out at trouble. I love everything about it. Absolutely. It's good to see you posting it here again, Paul. That three chart skidoo, man. That was such a good look all the way across the board. I like how you defined your entry too, waiting for that down bar. Defines your risk. Really well done. Cav, just rock star. Momentum, potential to break the divergence, best entry ever, out at trouble. Let's just make money the easy way. That's what Cav is saying. Let's not fight anything. Let's go with the flow. Let's do it the easy way. Oh, is that Trina's? Nice. Oh, look at that. All right, guys. We got to go support Trina. She's going to make us some Nexgen shirts. All right, Cav again. Making some changes in your trading plan. I like it. Background red just means, so background red means I'm looking for this, right? Termination, triggers roll both sides, everything rolls, and you place a limit order inside the triggers, stop above the divergence line. I like it. One of the things you can do with NASDAQ, Cav, just as you're working on your new plan, pay attention to these small triggers. And man, if this is your entry spot and I like it, when those small triggers are that far away, that's going to be a confidence builder as well. And when they're not that far away, see how they act as support right here? That's kind of your little, all right, let me wait a second. And man, you had every indicator going down. I love it. And then once you get the reversal bar, there's virtually no risk. Nicely done. Let me know if there's anything I can do to help you with your plan. I guess you're doing it now by posting in the room and getting feedback, huh? All right, better dad. Better dad, are you with me? I love that. You know, that's the Mark Douglas thing too, Cav. I saw you post that earlier. Guys, when you focus on the money, you rarely find it. When you focus on the process that produces money, that's what creates results. And Cav, I love that you're working on that. That's the lesson. All right. So I'm going to go through the entry rules, better dad. And this is just for everybody, and I want you to see why. So first, it's wait for a reversal bar. Second, it is define retracement zone with large synthetic. I'm doing this for a reason, not only for you, better dad. And then third, find an area in that retracement zone for entry. That's for the high probability trend trade entry. And that area inside of the retracement zone, this is the area I'm anticipating a bounce from. Does that make sense? All that makes sense, right, better dad? You're great at entries. So first I wait for the reversal bar. The reversal bar signifies the beginning of the pullback. This is where we've got to do a little critical thinking. If my reversal bar dissects the only area inside of triggers, so if my reversal bar closes below the area, is that area really the one that will create a bounce? So the reason that I did this, better dad, And let me give you this picture, because what you took here is, and this is only me going back to your annotations. No, okay. But let's do this. So check it out. Check it out, check it out. You have momentum. Everything is up. Small triggers break the 1-to-1. So this entry right here, Better Dad, is what we call a momentum trade. And it's nice. It's a good looking momentum trade. And this is something that the Nexgen has been teaching for an awful long time. Whoops. Price breaks above, snaps back to the 1-to-1s. There's your momentum trade. So crude is giving us one right now. Oops, that was silly. Where'd your picture go? So when the momentum trade fails, and this is why I believe naming the trade is a good thing. When this 1-to-1 doesn't hold, Better Dad, that's where I get the hell out. That momentum trade's not going to work. And when momentum trades fail, a lot of the times they turn into trend trades. Does that make sense? So this look on both charts says that that could be the result. But if I get 2 down bars, that's not going to be a momentum trade. This is where I can exit, take my little hickey. I'm totally cool. It's 3 or 4 ticks. And then wait for the next one. It's okay. It's a great look. It's an awesome trade. It really is. But because it's not a high probability trend trade, it maybe shouldn't be managed like a high probability trend trade. That's the point that I'm getting to on this one. Is that if you're not taking a high probability trend trade, there's no reason to manage it like a high probability trend trade. Which means you could have taken a much smaller loss. Even though you got in. I think you got in at the right spot. But I think you managed it like the trade that it isn't, and it created bigger losses. If you manage it like a momentum trade, 2 down bars, it's not a momentum trade anymore. That's a pretty significant difference. Does that make sense? I talk a lot about name your trades, guys. Name your trades. Because if you know what the trade is that you're getting into, and you may have legitimately thought, okay, no worries. Then I thought that might have been the case. That's why I drew this picture. So, because I think this right here, if you dissect the area that you're hoping to create a bounce, you just have to wait for the reversal bar. You know what you did. I just saw the momentum trade there. I thought, oh, that's great. You just could have lost a little less. It's a great look on the large chart. They just weren't having it. They just weren't having it yet. Good stuff, man. All right, Cav. Everything says up. You fought it. Where was that? 23.15. 23. So this was all the way down here. Okay. Little misleading with everything up here. So you had a strong top. You had strong triggers. You had the potential to break, Cav. Divergence is a killer. Fighting the small triggers on the NASDAQ is a killer. So you had a couple things against you here. If you're going to be a NASDAQ trader on Renko bar charts, guys, fighting those small triggers is a colossal pain in the butt. And I don't know why you had so much risk on there. You got a reversal bar to protect yourself behind. Hell, you had 2. Large chart looked great. Small chart would have bought you a little bit of patience there. And that's kind of a NASDAQ specific sort of thing. All right, Joel. I bet you these revolve around momentum. Let's see. First one, everything says up. You take it in on the pop up, absolutely beautiful. And then when you reach the fib, it doesn't break. Small chart rolls, you let it come back on the way. I mean, this is perfect, Joel. And guys, this is using higher time frames. Paul W. Joel uses those higher time frames like you too, man. He uses the 21 and the 13. And he says, all right, here's a termination. There's weak triggers, divergence prints. I would never take a 50-50 long. I've got odds favorable momentum. And he lets it come up and head down, and he catches it on the way down. Joel, I love this trade. Both of them, both directions. Very strong. And then with odds favorable and nothing in the way, you do it again. You let the fight fail, and on the way down, you just rock star it. Then you let the fight fail on the way down, and you rock star it. And look what the large chart looked like the whole time. Strong triggers down. Nothing in the way, guys. Momentum and path. Joel, outstanding. Weak triggers. Anything can happen. And guess what? Anything happened. I would say that's an acceptable loss. And Joel, I have to address. Thought we were going down still. Got out as soon as I noticed losing the momentum. Thought we were going down still. I never think we're going down still. My indicators say. Indicators said down. Indicators said clear path. And the one thing you were missing was momentum. You had momentum and you exited when it was gone. It's a perfectly managed trade. Really well done. This one has the clear path, the loss of momentum, and instead of getting in on the way up, you get in on the way down and take it right to trouble. Really well done, Joel. Great trading, man. Great trading. How we doing so far, guys? You feeling okay? Kev, wow, termination central. 1053, 1053. Took this trade even though the triggers in the mid band below the 1-to-1s got run over. Ooh, you think that's why you got run over, Cav? Cav, did you notice that price reached the 1-to-1s? None of the triggers broke. Divergence printed off of it. That was the death right there. Directly into a termination condition. Directly into a termination condition. So who was asking earlier? Was it Jared or Peter? What are those pink dots? On the NASDAQ, these pink dots can stop a market. There it is right there. So it was a divergence high. It was pink 1-to-1s. It was divergence on the small chart. And it was a huge hold. But directly into termination conditions. One of the things that I've noticed, and you guys may have noticed this too, is that trading into termination conditions on the NASDAQ doesn't work very well. Whoop, we saw that one better, Dad. Did you accidentally post twice, or am I in the wrong spot? I think I'm in the wrong spot. But when everything is up with a clear path, it's pretty easy. Where was your entry here, Cav? So there's the easy one right there. Pull back right to the areas, right inside of triggers. Absolutely perfect. Cav catches the second win. Couple ticks above support. Everything perfect. Gets out of trouble. Nicely done, Cav. And Cav, I don't know if you're listening or if you're trading, but I would re-annotate that chart directly into a termination condition. As you're working on a plan, it's important to note the things that aren't working. Morgan. Strong bottom, odds favorable, clear path. There's your first entry, right? And they're like, oh no, we forgot Morgan. Let's go get him at the area inside of triggers. Profits taken, break even, and you're working on that management plan, Morgan, that says with all of this momentum and a clear path, let's see if they make the fib, but I'm certainly not going to lose if they don't. Nicely done. Guys, this is the market coming to get you. And this is why I said when we're talking about moving your stop to break even, it's maybe not the best stop, right? Because it's at an area inside of triggers. That exit was where another entry. Well, I'm glad I said that then, because technically, right, that stop is where the rules are met for another entry if it happens. Did it happen? There it is. So could we buy the market and just be right behind the reversal bar 2 ticks, like the KISS plan? And if a third divergence prints, then I'll exit. And if it doesn't, then we'll follow the plan. Do you guys see it? Odds favorable, clear path, pull back to the mid band, pull back to the mid band. It's only 2 divergences. 2 divergences is not an exit condition. We got the reversal bar. If we had gotten in at the right spot at 83, we'd already be up $100, right? So that's a late entry. How do we feel about it? Momentum, path, first target hit, go break even. Second target's at $200. Ladies and gentlemen, welcome to the KISS plan. The only thing that should take me out of this trade is 3 divergences, and I don't have it yet. Are they going to make the next target? What do you think? I'm in late, but I'm already up $100 and I can't lose. So who cares what happens? Made $100. Morgan, that was a good lesson, right? I'm glad I came over and saw it. I missed some that you went crazy on. Did I have more than 3 charts from you, Joel? 1, 2. Oh, yep, I sure did. I'm sorry. Nope, hold on. When did you post them, Joel? Was it early? Looking, we saw that one and talked about it. We saw that one and talked about it. We saw that one and talked about it. Here we go. Yep, 1, 2. My bad. I got you. All right, let's take a look. So, I see the entry and a stop out here. I'm not sure why. Maybe that's on the other picture. Odds favorable. Potential to break. You get it on the way up. That one's pretty easy. I like it. Strong triggers. Get in on the reversal bar. That one was easy money. There is your rules-based entry. We've seen that before. Bought the pullback with a couple add-ons. The market is screaming up. Strong triggers with momentum and room to targets. What's the crazy? Is this your crazy? That entry fits your rules, right? Is this the one you need my opinion on? Okay. I'll do it. So let's focus on this. Large chart screaming up with momentum and room to targets, right? That's the whole basis. Your rules say if they fight and fail, enter. That's a rules-based entry. I don't know where your stops go. I don't understand your stop placement, Joel. But the smalls are still above the large. So you still have momentum on 2 charts. And you don't get stopped out. I'm guessing you're behind the fib. And when they fight and fail, that's rules-based entry, right? I like the blue cheese spelling. And then they fight and fail, and that's a rules-based entry. And then they fight and fail, and that's a rules-based entry. So the only question I have, Joel, why the hell did you exit? What changed to make you exit that trade? Okay, where are the large triggers? They're not a full bar away, are they? You still have odds favorable momentum. So okay, so then let's address this. Your exit reason is your exit reason, and I support it 100%. If your mid band was at 85.50, why would you put all that risk on a trade for 3 ticks? Why would you put all that risk on a trade for a tick? Why would you put all of that risk on the trade for 4 ticks? So Joel, you believed in the momentum enough to take an entry, but you didn't believe in it enough to justify the trade and hold. Does that make sense? Why on earth would you take a 13 2 bars worth of risk? And if you're below the fib, we're talking about from 84 to 76. We're talking about 8 points of risk this way to make 2 points that way. That's not a very big return on investment. That's not a lot of reward for your risk. I don't disagree with any of the entries, but if you knew in advance that was your exit, it doesn't make any sense to trade directly into the exit. So my 2 cents would be, if you're going to take the trade, have room to get there, right? And if you start running out of room, maybe don't add on. Maybe that's not your best spot for an add-on. That's up to you, though. You have to make that decision. But every day, the one thing, you're welcome, that I really like is when we talk about the patterns that repeat themselves, the mid band is a termination condition only if the large triggers are a full bar away. Who asked me about the reversal bar marker? This is one of the ways that we use it on the large chart. If price reaches a mid band and the large triggers are below that reversal bar marker, mid band's a termination condition. If the large triggers are above that reversal bar marker in a long trade, the mid band is just a squiggly line on a chart that doesn't scare me. So, not a full bar away. This mid band's not really on my radar. You can tighten up into it, but it's not on my radar as a termination. I love that 91 area for a target. You had the golden goose. That's good stuff, though. Does that all make sense? And I don't mind the mid band as a target, ever, in any situation, Joel, especially from a bad bottom. Good stuff. Good stuff. Sorry I missed those. I didn't mean to. I never mean to. Sometimes I do, though. All right, Cav, let's see what you did, brother. Cav says, strong triggers. Small triggers stay above the 1-to-1s and the large triggers place a limit order inside the large triggers. Okay. A little bit above the mid band and you just ride the momentum. Cav, when you talk about your plan, do what you want, right? Are the triggers are your entry, not areas inside of entry? Not areas inside of triggers? I'm just curious. As you test a plan, I'm going to try to areas inside of the triggers. Okay. One of the things that I noticed that you put a lot is limit order inside the large trigger. So if you had a limit order here, you were probably 4 points above the mid band at the time of entry, because that mid band would have been all the way down here, and that's what I ask. That's why I ask. Good stuff, though. With everything screaming up, it's hard to not go up with it. Jared says, Jared, I love that you posted the picture, man. Thank you. Jared says, Mark, what the hell is this number? So what it is, Jared, They're not fib areas, and I'll show you, let's see if we can find a live version of it. So right here, that negative number, and it didn't show up on that. The potential for divergence just went away. All right, so this negative number, I know you didn't. I apologize. I didn't mean to put words in your mouth. Will not happen again. This negative number says there is the potential for divergence. And as long as that number is flashing and changing and that line isn't there, it's only potential, Jared. That's all it is. So it lets you know, hey, I've got the potential for divergence, but I won't know about it. I won't know whether or not divergence is true. Come on, there we go. Here it's only potential. If it prints with that line, it's true. And you know that it's true right about there, about 2.5 bars up. So I won't even know if divergence is true until all the way up here. So I don't trade the potential. But it lets me know, hey, there could be a loss of momentum. The potential is there. It's running calculations, but there's not enough data. I need this to be an up bar. I need a second up bar. And then in the halfway through that third up bar, I'll know whether or not divergence is true. So you can use that, Jared, if divergence on a small chart is one of your exit conditions. So for example, well, it didn't happen. We got stopped out break even on that one. If that divergence was flashing right here, that potential, and you're like, oh man, 3 divergences can end the trend, well then you might take that flashing number and say, okay, I'm ready. If that divergence prints, if it becomes true, I'll exit my position. So it gives you a heads up on the potential, but it is just potential. I've watched divergence threaten all the way down in like a 50-point move before. The potential was there for the whole time. It just never realized. So on this bar, the divergence is true, or the potential is true, but divergence is not. There hasn't been an actual loss of momentum yet. Let's see if they'll give us a live world where they go up a couple bars and it becomes true. So it's still just potential. I'll know about 2.5 bars in. So if for some reason you traded short directly into support and you're like, oh no. Or maybe you're like, I want to go long from support, but I want divergence. I want that loss of momentum to let me know. This shows the potential, but it's just potential until it has a line associated with it. So didn't happen on that bar, and see how it's still pushing down with momentum even though the potential is there. Good stuff. Great question. And then the number itself, Jared, once it does print and produce a line, the number itself, it has no value. So bigger numbers aren't more divergent-y than smaller numbers, and smaller numbers aren't more than bigger numbers. Good question. Good top, triggers roll, all's favorable. There was your entry. You're welcome. Keep them coming, man. I love the questions. So there was your entry with the close on the correct side of those smalls. Easy money. And here you're just late in the move. You already had 2 divergences. You have weak triggers. And they just... Nice exit. Quick snippet, right? That's the one. Cav, as you work on a plan, can I encourage you? Write your entry rules as well. So here you had a good top, you had strong triggers. Talk about your path, right? Because terminations have already gotten you. Talk about your path, but write out your rules for entry. Because I feel comfortable saying, actually, you know what? That might be your entry. Stop. Pull back to the mid band in the retracement zone, right? Define it a little bit every time, just as you're working on your plan. And I say that Because what you're doing is you're writing a recipe right now. You're writing your recipe for your trade. Um, One of the things that I have in my arsenal, let me share it with you. You can have this. Where's it at? There we go. This is the fill in the blanks. So anytime I'm studying a new trade, Cav, I'll create my own checklist. I'll have very concrete rules for entry. And then I'll take 10 pictures of it. And I make sure that it wins more than it loses. I take about 100 pictures of it. But I think one of the things that you can do for consistency is you can create that checklist. So if you want this, you can have it. If you don't want it, no worries. Not everybody learns the same way and does that. But anytime I go for a new trade, this is exactly how I do it. And I'll show you an example of one that I used. You guys that take the chili dog. I did the same thing. I created a checklist so I knew exactly how to get in. I wrote out my management, how to study shorts, how to study longs, and then I just started taking pictures. And then for me, Cav, and this is what really pays dividends, is what it looks like to not have the rules met. When it's close but not quite, I want to know what my red flag is to keep me out of the market. So I did the exact same thing with that fill in the blank for that chili dog trade that Ron gave to the room and everybody has kind of run with. So good stuff. All right, guys, I'm going to take a couple minutes. When I come back, I'm through all the pictures on I am through all of the pictures. Look, Jared, it still has the potential for divergence. Still hasn't come to fruition. That's why we don't trade potential. Wouldn't you hate to exit right here with everything screaming down based on potential? When I come back, we can start looking at TradingView. If you guys have questions, we can still look at NinjaTrader stuff if you have questions, if you have posts there. I'm really just opening the floor for you guys for TradingView. If you have a question about anything, the trades, the plan, the indicators, throw it in the room. I'll be back in just a minute, and when I get back, I'll go through kind of a little remedial 101 for TradingView. And we'll talk about whatever you want to talk about. I see a lot of people in here. There's got to be a couple questions, guys. See you in a minute. Claire, thank you for that. Back of the bar clearing price. I'm telling you, that's not an original thought on my end. That is Ron. Ron C. He's not in here today. He developed this trade that he calls the chili dog. And the whole premise behind it is when you have momentum and nothing in the way, you're going to find a way. And it goes off of, he learned the high probability trend trade first. And the whole idea behind it, just for the people that missed the lesson, is that if decisions are made at areas, letting price clear the area completely, it pulls the market away from the decision-making area. So I thought it was brilliant. And I see a lot of people try to emulate his trade, try to take this trade. And until you learn and accept that lesson, you lose more than you win. So it's a great lesson. All right, let's do TradingView. Let me pull it up. I'll leave that up. So the PowerPoint, all it is it's the 3 trades. And I'll pull it up right now. There it is. So there's 3 trades that are in the plan. So I'm going to do 2 things. I'm going to get it to the first one. But I'm also going to give you guys these. For those of you that are new, I'm going to give you the indicators. This is everything that we're using on TradingView. It's everything that you're used to on Nexgen. Nothing really groundbreaking there if you're familiar with Nexgen. I'm going to give you the TradingView plan. So there's the written version with the checklists of what I'm about to talk about. And I'm going to give you the TV trade journal, guys. And I'm trying to update this with multiple pictures every day. So, excuse me. So I'm going to get going. Guys, if you have TradingView questions, I'm learning how to teach TradingView right now. And your questions are going to make me a better teacher. So please don't hold back. So there's 3 trades. Actually, you know what? Before we talk about the 3 trades, Claire, I do want to open the plan because it's important that we talk about this one right here, guys. There's 2 charts. There's 2 charts in the TradingView plan in the workspaces that John Novak has built for you. There's a 15-minute chart. This one's on the left, and it's your roadmap for key targets, starting points, terminations. The trigger lines on this chart will define the direction and overall momentum of the market. Both triggers in the same direction is the best, guys. And if they're not, you're going to look for that smaller chart to have triggers crossed in your favor. And the smaller chart is a 1-minute chart. It has market flow on it. So if you're not familiar with market flow, you've got some new toys to play with. And the 1 minute defines the immediate strength of the market. It defines the entry points. And we're going to look for pullbacks into zones that have been broken and retested, the same way we reach one of our Fibonacci-based indicators. You will see the VWAP on these charts, and that is a volume-weighted average price, I believe is what it is called. And the VWAP is just another area. I like to think of it as kind of similar to the yellow 1-to-1s, guys. It's a place that could create a bounce. You got to watch out for it. Entries will be taken from the mid-band for trend trades. HVA lines from terminations and zones. That's the HVA trade. And then also momentum. You're going to use the HVA lines as well as 1-to-1s for momentum trades. Just so you have that. And now we're going to talk about the high volume area trades, guys. This is your opportunity from a top or a bottom. So the high volume area trade, this is really nothing new. The way Nexgen has taught for the last 20-something years is if price reaches an area and the area holds and things roll, the high volume area trade is your first opportunity to go opposite direction, to go the other way of the way the market had been going. So the 15-minute chart zone has to be reached, whether it is one of those supply and demand zones, whether it is yellow 1-to-1s, divergence highs and lows. You've got to reach something on the large chart. And then your small chart, has to tell you that that large chart might be putting in a top, and it does that with the triggers rolling. You've got to get those faster of the two triggers, the small triggers below the large triggers. And this is what lets you know that change is coming. And guys, remember, these are minute charts. These are not Renko charts. It takes longer for this to happen. So this buys you a little bit of patience, to be honest with you. There is no 10 bars in 8 seconds. It is literally 10 bars in 10 minutes. So you're going to look for the roll, and then you're going to buy or sell a pullback to the HVA line. So for a short trade, it'll be the magenta line. For a long trade, it'll be the green line. And this is what it looks like. So first, the zone is reached. This is rule number 1, guys. HVA trades don't come from the middle of nowhere. HVA trades come from an area being reached. And then it is your small chart, smalls getting below the fast. This is what lets you know that change is coming from the termination condition. So you've got to let the small chart slow down. We're not just jumping in at a zone, because look at the momentum that could still push up. Once these smalls get below, they're angled down, we're going to look for an HVA line. And an HVA line is nothing but it's a line in the sand that says, hey, guess what? We hit something. We're turning. Let's see if we can find one in a live market. We'll go back and look up here. I just opened it. I don't have my HVA line. So an HVA line comes off of a breakout bar. Take care, Cav. And if it's confirmed with another down bar, this pink line is a line in the sand. This is the area where all of the sellers got together and said, you know what? If the buyers come back, we're going to push. And guys, that's exactly what they did here, is they pushed. And they pushed right back to the zone. And now with this breakout bar, it's confirmed by the up bar. This green line is the line in the sand that says, hey, if the rules are met and they come back, that's where we're going to unleash. So from a high, we're selling that magenta line, that line in the sand, that concentration of sellers that came from the breakout. And then from a low, we're doing it at a green line. It's the same concept. So that's the first plan on the page. The trend trade. I love trend trades, guys. And they are so easy on TradingView. Don't have anything in the way on the big chart. Don't have anything in the way on the small chart. How easy is that? And then you're going to buy or sell a close on the correct side of the triggers at the 1-minute mid band. So when you go through, your 15-minute has got to have no zones, nothing in the way. Clear path, we talk about it all the time. Your small chart, we don't want it trading directly into a zone. If it bounces off of a zone, we're cool. The VWAP is not in picture here. I'll find you one, Nanda. And then once both of these say down and nothing in the way, where'd it go? There it is. You're going to let the market pull back, get to the mid-band, and then, guys, not your entry, not your entry, not your entry. Go at the close below. Because when you don't fight these triggers, guys, that's where it's easy. And when this is down and everything says down, that's where the easy money comes from. A VWAP, Nanda, is this white line right here. And you'll notice it definitely creates bounces. So it's just a little thin white line. That's all it is. A lot of times, if I'm in a move up, so maybe I'm going up, the VWAP is a great place for targets. The VWAP, when it's with a zone, is pretty darn strong. And I don't know why they react to it the way they do, but they do. It's got dots. Nope, there's no dots. The VWAP, at least for us, is this solid white line, Jared. That's hard to see it like that. So this solid white line running through, that's your VWAP. And you could probably adjust it and make it have dots if you wanted to. Always paying attention sometimes, kind of. Did that get you, Nanda? And it really is. If the market's coming down, it's a place where the market may bounce back up. And if the market's coming up, it's a place where it may bounce back down. Right here, Jared? Like that bad boy? Yeah. So that's your outer band. So when we talk about, where's that picture? So when we talk about, there it is, the mid bands, you're familiar with the mid band that runs through the middle. So the outer bands are like exhaustion point mid bands, but they're on the outside, so they're outer bands. And you'll see them run, and they run with the mid band. They're moving averages, I believe, either Bollinger or Keltner. And what happens is if the market's in a big downtrend, they're kind of a point of exhaustion. If the market's in an uptrend, they're kind of a point of exhaustion. So it's a great place to take profits. Outer bands are a great place to take profits because that could produce a bounce. All right, so there's your trend trade. One more trade, Jerry, and then we'll figure that one out for you. I believe it's a part of the workspace, if I'm not mistaken. Because all of my workspaces are put together straight from the workspace downloads. So guys, this is the momentum trade, and this is the one that I think most of you are going to latch on to, and this one's a lot of fun. The 15-minute chart can't have anything in the way. No, that was my 15-minute chart, Claire. There it is on the 15. There it is on my 1 minute. I don't really pay attention to it on the 1 minute, but on that 15, on that bigger time frame, it seems to be a little more significant. Momentum trades, nothing in the way on the 15, guys. Don't want to trade into those key areas on the large chart. And you've got to have strong triggers on both charts. We've said it 100 times in this room. How can you have a momentum trade if you don't have momentum on both charts? So both the 15 and the 1 minute will have strong triggers. And then guys, then it's just that snapback. So when this is strong and this is strong, you're going to let price break above and pull back to, whether it's 1-to-1s or an HVA. You can even do it on a mid-band. Excuse me, you can do it on a zone. But when both charts are screaming, it gives you a solid launch point. And I will literally buy the 1-to-1s, and when that market starts up, I'll put my stop a little bit behind it. I'll do the same thing with HVA lines. And that's it, guys. Those are the 3 trades. It's a pretty basic trading plan. It's a very effective trading plan. I think I've already dropped it in the room. I've also have intro to TV. This is the PowerPoint that I just went over in PDF form for you. But when you come through and you look at these things, does everybody see how price has reached a zone? And there's my most current price, 21,401. And I'm into a zone. And because I'm into a zone, it's okay to do nothing. It's okay to wait. It's okay to hold back. It's a little harder to study historically on TradingView. This is the S&P, and now I'm trading above the zone with momentum. And I'm getting into something on the 1-to-1, but if I pull back and retest a zone, there could be a potential momentum trade. And then there is crude. And there's why you wait for the close on the correct side of the triggers. All right, I'm going to open it up for you guys now. Steve Diego. Odds favorable momentum. Not a chili dog trade, Steve. So the zones, Chris, the zones are created automatically. Absolutely. They are a set of indicators. Mine are from Chart Prime. Those are the ones that my brother, he did a lot of testing on supply and demand zones. Those are his favorites, so I trust his judgment. There are free ones that you can find, go through, look at them, see how they hold. But Chart Prime seems to be the best that we've found. All right, so Steve Diego. Okay, but it's not a chili dog, right? Doesn't fit the chili dog rules. Didn't clear the mid band. Didn't clear the one-to-ones. You're just jumping in because of momentum. And then you lose momentum and you re-enter. And that's your momentum trade right here, Steve. Smalls go through, snap back right at the area, and it goes up. You take 2 off at trouble. I love it. You waited for the reversal bar so that it would be less risk, or at least defined risk. And then 3 divergences print, and you're out at break even. And this is one of the things that waiting for confirmation when you don't need confirmation, guys. So Steve Diego, if you have odds favorable momentum and you have a clear path and you have an area inside of triggers, why did you feel that confirmation was your better choice? Because the bar goes from 81 to 91. So that's 10, 11, 12 ticks, right? From the area inside of triggers, it's 10, 11 ticks. Getting in at the area. You didn't reduce risk. It's not a lower risk entry. You just reduce distance to the profit target. Guys, when your rules are met, you got to trust the process a little bit. Great entries create manageable trades. Confirmation is for when maybe it's not perfect, right? It's not odds favorable in a clear path, or maybe it just something isn't right. But guys, when it's perfect, take that trade, accept the risk. If you can't, if you're not comfortable with the risk, it's typically better to not take the trade. I hope that makes sense. Good stuff. I like it. That's just the momentum trade. When the momentum trade failed, it turned into a trend trade. And then the trend trade made it up pretty good. You got 3 divergences. All right, guys, I'm putting it in your court. Putting it in your court now. What do you want to talk about? I know you've been working on stuff. I know you've been looking at trades. I know you've been talking about things. What do you need help with? How can I set simulation mode in TV? Vittorio, you're going to open your trading panel. Let me get out of AMP Live here. And you're going to go to trading, paper trading. And when you connect with paper trading, it's a simulated account. And if you wanted to get out of paper trading, you would have to go and log out, and then you'd have to get into your AMP. I don't know mine by heart, so I'll just stay out of both right now. Good stuff. All right, who's been practicing TradingView? Who's been taking trades? Who's been working on moving stops? All that good stuff. Show me some pictures, guys. Let's talk about it. Or we can go back to NinjaTrader if you like. Whatever works for you guys. I tend to be so easy to get along with, guys. All I want to do is help out. The volume indicator you have to move up to a pricier version of TradingView. Is it necessary? Absolutely. Oh, for the market flow. That's all you've been using now, Roy? I like it. I like it. So Roy, if you don't have market flow, you can't take HV, or I'm sorry, Jared. You can't take HVA trades because you won't be able to see the HVA lines. So that's really what it's going to do, is it's going to pull those HVA lines out of the equation, which means there's one less place to take a momentum trade. See how with strong triggers, it pulls back right to the HVA line, and that's where it continues. So the HVA line is a representation. When they're green, what it means is that this is the absolute highest concentration of buyers after a breakout bar. It's like a line in the sand that says, hey, guess what? Try us. We'll push you. There it is right there. You get a breakout bar. It's confirmed by an up bar. It creates this green line. In this green line in a market that's already moving that way, there's always fluctuations, right, Jared? This shows you where that fluctuation is most likely to bounce. From a top or bottom. From a top or bottom, it shows you this green line is from a bottom. Magenta line, I just haven't had mine on long enough, would be from a top. So if you don't have market flow, you lose these lines. You don't have these lines or that trade. Whoops, that's not it. And that's kind of your first shot after a termination, is that HVA trade. You can hold out and wait for the trend trades, no worries at all. I love trend trades. And trend trades work really well. But that's pretty effective. Yep, and this is on a 1-minute chart. So you do need premium to run it. But if I pull market flow off of my chart, there was nothing to get me into that trade. That's okay. Trading well will fix that. Trading well will keep you from worrying about it. So it's just a tool. That's all it is, Jared. Can you build a house without a Phillips head screwdriver? Probably. We're just giving you the tools that are there. And the cool thing is, Jared, is if you get the indicators, it's going to be a part of it. They're going to be available. You might as well learn how to use them eventually. Jerry, you were wondering about the VWAP. Man, I don't know. I'm trying to see support, resistance, zone width, rating day, channels. It should be a part of it, but I don't know which one it's a part of. Indicators VWAP, is it in there though? I don't have it loaded onto the chart, so it's a part of one of these. It may be a part of, I mean, we can just delete them one by one and see. If I get rid of the market dynamic, there we go. That's which one the VWAP is on. So my market dynamics, that's where the VWAP comes from. There you go. And it's back. Pretty cool. Vittorio, you can't open the trading panel. Okay, so there it is right there. You click on it, but it doesn't open. Are you in the browser? Yeah, we're pretty tricky, Better Dad. Are you in the browser or are you in the desktop? In the desktop. All right, I never use the desktop, so let's see if we can open up a desktop. And Vittorio, are you trading? Are you trying to trade the workspaces from the website? Okay, so let's do this real quick. So you come in, and I want to make sure that we're not doing this. So I'm going through, and I'm not the tech guy, Vittorio. You know that, right? But I'm going to do my best for you here. If I click on it here, it's view mode only, and it's only when I copy it that it gives me this. So if I go down to the trading panel, mine opens no problem. Are you in the free demo, or do you own it? Or are you leasing it? All right. Vittorio, you may want to, here, let's do this. Because I'm not, how to trade on TradingView. No worries. Have a good one, Better Dad. Supercharts, find the trading panel. All right, if you have a broker, you can connect directly to them from the trading panel. If you don't see them listed, ask to integrate. If you don't have a broker, choose from your trusted broker. Open an account. Do you have an account open with somebody? All right, so here we go right here. We can read it together in the classroom. Not yet. Oh, NinjaTrader. So NinjaTrader, are they on TradingView? You would want to link to NinjaTrader through TradingView. Are they in that trading panel? I don't see them linked. Here we go. All brokers. That's a lot of brokers, isn't it? I don't know if NinjaTrader's in there. Second row. Oh, there it is. So you're probably going to link through NinjaTrader, is what the instructions said. Hopefully that gets you where you want to be. One of the things, and guys, there's questions that I just don't know the answer to. Vittorio, that is one of them. But that link that I just put in there is the one, paper trading, main functionality, live examples. Look at that, and if you don't get your answers, I would go to TradingView Tech and take a look and see if they can help you out. Unfortunately, I just don't know the answer for you there. But this link, the link that I gave right here, this is everything that they have on it. You're welcome to put in a ticket with Jason and Jose. Maybe they know how to fix it for you. I just haven't run into that problem yet. And most of the problems that I can fix here in the classroom are the ones that I've had to fix myself, unfortunately. All right. We do have market flow back on, which is good. Sorry, Vittorio. I hate it when I don't have the answers for you guys. What's next, guys? Is there anything else you want to talk about? You're welcome, Vittorio. I figured out, and I've been on TradingView for about 6 months now, and there's two things that I've realized, and maybe you guys will get this. When the 15-minute is odds favorable momentum, don't fight it. Luciano, it's not a termination condition. The outer band is a point of exhaustion. The outer band creates bounces a lot on the 1 minute. Whoops. Let me make that one bigger and tighten it. You'll see very often it hits the outer band and it creates a bounce. Gets to the outer band, creates a bounce. At the outer band, it creates a bounce, and then when it gets outside, that market's probably screaming. And for me, if I'm below the outer band, Luciano, It's a pause moment. I won't look for longs until I'm back inside of it. I won't look for shorts until I'm back inside of it. But there it is holding, there it is holding, there it is holding. So it's not technically a termination condition. It's a pretty awesome place to take profits if you're in a trade. I took a trend trade this morning right when class started. And I initially had my target up here, but because class had started, I put it right here at the outer band, and it hit it pretty easy. And we can see what that whole trade looked like and whether or not that should have been an exit. Oh, that's the S&P. No, this is NASDAQ. What time do we start class? 9 o'clock, right? Oh, I'm not in here. So at 9 a.m., this was our look. And this was my entry. And it looks like my exit was pretty darn good. So this was my look. Market pulls back to the mid band. I don't just jump in. When I get a close on the correct side of the triggers, that's my entry. And it goes right to the outer band. And I had my target right there at that outer band, Luciano. I wasn't even watching it even more because we started class. And what a great spot to take profits. So it's not a termination condition, but it is definitely a point of exhaustion and a great place to take targets or to take profits. What else? Fighting the triggers on the 15 minutes rarely works out. For me, trying to trade against the fast triggers has never worked out, unfortunately. But since I know that, I can be a little more patient. Trying to scroll back to a live market. So let's look at it. Everything is up. Haven't reached a zone. We have a live trade, guys. Awesome. Have fun with that. So right now, for rules to be met, I need to come back to a mid-band, and then I need to close on the correct side of the trigger. So 15 minutes says up, hasn't reached an area, looking for a pullback to the 1 minute mid-band. Does that make sense, everybody? This is my zone. And guys, with those triggers down, odds favorable momentum, got a pretty good shot of getting there. And it may not. We'll see what happens. I know where my trade comes from. I know what my rules say. I know what needs to happen. So now I'm just waiting for it to happen. And I think these 1 minutes buy an awful lot of patience, guys. These 1 minutes, when you know your rules, they force you to just sit still and wait and relax and know that you're not in charge of what happens. The market will do what the market does, and it either gives you an entry or it doesn't. But right now, it's momentum for the win to the downside on that 1 minute chart. So we'll see what happens. If they get down to that 21,405 range, then everything is set except for the close on the correct side of the triggers. What do you guys want to talk about while we wait? You open one account on Nexgen. You have not received an email to complete the process. When did you open it, Jerry? It was Saturday. Send a ticket to Jason. I know that the programmers were working on Sunday on some stuff. And there was a couple things that went through here and there. And I don't know, I can't give you a clear answer because I wasn't included in it. But if you put in a ticket with Jason, the credit card was processed. Yeah. Put in a ticket with Jason and say, hey, Jason, did you check your email? So you went through, hold on. So you went through, you bought the evaluation, and it sent you the confirmation. Hey, we did buy it, but it didn't send you the CQG data. All right. Double check with Jason. I'm sorry, I know that's not the answer that you want, but these guys have all their fingers on the buttons. They don't let me play with the buttons, Jerry. But it'll take them no time. I know that happened once or twice. I don't know why it happened, but I'm pretty sure that they were able to fix it and get it all taken care of. And sorry, again, God, I feel horrible when I don't have the answers that you guys need. That is definitely a tech question. Will the links on the spreadsheet with Snagit, will they also open in the free version? Which free version, Claire? Free version of what? Just so I know. In the, you have open, oh, what's it called? I haven't even done it in so long. You have the alternative to Microsoft, right? They should, because the Snagit links have nothing to do with Microsoft. It just goes to the yeah, for sure. So you don't have to have TechSmith to open up the link. The link is my picture in the cloud. Do you have the spreadsheet in front of you? This is one of those things where I just say, Claire, click on one and see what happens. But I've had people in the room that don't have Snagit, and they've never had a problem with them, so I have to assume that there won't be a problem with them. I would say click on one and see what it does. But I don't think it'll be a problem. Oh, they just didn't make it, did they? Those sons of guns just didn't make it. Guys, what else? We're a little afternoon here. Is there anything else you'd like to talk about? Anything else I can help you with? Oh, okay. It shouldn't be a problem, Claire. She shouldn't have any problem. I know there's people in this room that don't have Snagit that still use Capture, and they don't have any problems because they're the same entity. But I don't think that the link is dependent on screen capture or Snagit. It's the screencast that puts it into the cloud, and then it's that link that gets you the visual on it. So it's just like a web page, which shouldn't be any issue at all. Cool beans. The beans are cool. All right, guys. I guess that's it for me today. Good stuff. Good class, great information, awesome questions today. I appreciate it. Remember that my email works, and remember that you can send me a message in Discord if you need help. And also remember that Nexgen staff will never send you a message in Discord. We'll never offer to trade for you. We'll never ask you for your crypto. And that's why I don't message people first. So send me a message if you need help. I'll do my best to help you. Otherwise, go enjoy your afternoon, guys. I will see you tomorrow morning, 9 a.m., bright and early. Take care, everybody. Y'all be good. Oh, and I'll post up today's video in just a second.